Okay, good evening, guys. Welcome to our monthly meetup. Today's July 16th, 2024, and I'm the host of the meetup. My name is Roy Maddox. My partner is my son, Wesley Maddox, who's the co-portfolio manager, the chief technical strategist at our firm. And we're thrilled to have you visit with us tonight and tune in. We look forward to sharing with you our thoughts regarding the market. The agenda tonight will be broken up into two components. In the first part of the presentation, I will, after this introduction, Wes will take you through a slide deck to give you a sense of hopefully the temperature of the market as we see it looking at various technical indicators. And then in the second half of the program, I will be focused on looking at individual stocks. And that's the part of the program that everyone it just enjoys so much because you get it. We're going to show you who we think are the leaders in the market today. We'll show you really our portfolio, what we own, and we'll answer any questions that people have regarding the stocks they own on the call. So we're thrilled to have you here tonight. We hope that you enjoy it and tune in future episodes. I've been employing and practicing CanSlim for almost 40 years now. I met William O'Neill in 1988 along with David Ryan, and that really changed my life. And I fell in love with the market then, and I've been in love with this profession since then for almost 40 years now. So I'll be doing this for the rest of my life. I'll never retire, never do anything differently because I just love what we do here in terms of investing in stocks. So again, we'd like to give you a heartfelt welcome, and we hope that you get something from the presentation tonight. This is our meetup group. We've been established for over 10 years. I've been leading this meetup group for 7 years now. We have almost 3,000 members, and the members are all across the country. We'll have people that typically tune in from anywhere from Texas, Washington, Oregon, Denver, New York, Florida, Louisiana, just all over the map. So we have just an eclectic group. That's Canada. Thank you, Chris. And we will have very seasoned investors and traders on this call, and we'll also have novice investors. If you're just getting into CanSlim, and then CanSlim, it's been defined through William O'Neill. It's defined in William O'Neill's book, How to Make Money in Stocks. And that's really the Bible that we use in terms of explaining our methodology. But you're going to have. Don't fret if you're a beginner, because everyone begins at some point. But and most of the people here always had to start somewhere. But what everyone has in common is that their love for the markets as well. So you're in a group tonight of people that just love the market, and you should find some unique, interesting, educational tidbits tonight. So we hope that you learn something tonight. Be sure and pitch in if you have any questions. Just feel free to voice those. And if you want to express your view, feel free to do that as well when we're looking at some of our market indicators and also individual stocks. Disclaimer, of course, this is not intended to be construed as investment advice. Many of the members here are acting alone and be able to, be sure and use your own investment advisor when you consider what we're all talking about tonight. But of course, we don't make any representations or warranties or anything like that, and so forth. So just take a look at the disclaimer, and it's pretty self-explanatory. Okay, CAN-SLIM, this is the acronym that O'Neill developed. Of course, it's in his book, How to Make Money in Stocks. Now, this is the acronym that he came up with to establish the criteria that great leading stocks have had in the past. And in the book, How to Make Money in Stocks, he actually goes back, over 100 years to show that these criteria and the characteristics of great winning stocks are very, very similar. So really what you're trying to do is, in an environment like today, is you should be trying to watch where the money is going, follow the money, and follow what the institutional footprints are doing. And that will serve you well. It has served me well over the decades. Of course, we believe, Wes and I think that everyone should have, quote, a process. This is our Nick Saban process, which is really heresy, because I went to LSU and I'm talking about Nick Saban's process. But anyway, from an investment perspective, we think that you should consider technical analysis, fundamental analysis, and macroeconomic analysis in terms of having an investment process to make your investment decisions. Well, what does it mean when you consider technical analysis? Technical analysis are indicators that are really based on price and volume. And many of you that are on the call tonight, you're familiar with things like your moving average convergence divergence indicator, RSI, stochastics, point and figure, rate of change, and trend. Now, trend is the most important concept, and we will talk about that tonight. And by the way, we did just finish a nice presentation with Traderline and Richard Moglen, where we talked about trend. We talked about trend for over the past 9 market tops, bull market tops, and bull markets that have occurred since in the 1980s. Be on the lookout for that. That will be posted on our Twitter account. And we know a lot of people are waiting for that. So that should be coming your way shortly. Now, trend, we defined, and this is the way that Wes and I look at it. We define the trend being short term using the 10-day moving average and the 21-day moving average. And these are exponential moving averages. And we consider the short-term trend to be in an uptrend when that 10-day moving average is above the 21-day moving average. We consider the trend to be in an intermediate term trend when the 21-day EMA is greater than the 50-day EMA. That means that we're in an uptrend. When it's below, then we're in a downtrend. And finally, the long-term trend. And it's important. The reason we're talking about this is it will be rarely that you can make money when the long-term trend and even the short-term trends are in a downturn. The long-term trend, we look at the 30-week moving average, which is very similar to the 150-day moving average. Now, that's something that I picked up from Stan Weinstein over 3 decades ago. So we use that 30-week moving average to establish whether or not we're in a long-term uptrend or downtrend. From my work, and we talk about this with Traderline, when the market closes 2 weeks below the 30-week moving average, you should be totally out of the market. You should have no exposure whatsoever, and that will serve you well in terms of preserving your capital when we go through these bear markets that that occur, about every 5 years. And in 2022, we were actually on the sidelines for 9 months in that bear market because the market was trading below the 30-week moving average. Now, breadth, Wes will be talking about some of these indicators, breadth and sentiment, but we define and look at breadth and consider breadth by looking at the percentage of stocks above their 50-day moving average and the percentage of stocks above their 200-day moving average. This gives you color and context to see, well, is the market healthy or not? And the market has clearly come on, and breadth has been expanding, which is great as we've been rotating out of the Mag 7 and the mega caps into a more diverse and broadening out in the overall market, which is very, very good. Wes will talk about the new highs and new low indicator, which we view as really the most important. If you had one indicator to look at, it would be the new high versus new lows to give you an idea of, is the market healthy or not. Wes will also talk about sentiment. The NAAIM is the National Association of Active Investment Managers, to give you an idea what the professionals are doing. How invested are they? And so that's useful information as well, and Wes will take you through that as well. And we may talk about some ratio analysis. Recently, the IWM has been outperforming the SPY, as you know, for the last 5 days, as the rotation has, it looks like the rotation is on, it's on. And so we'll talk about that rotation that's going on as well. So a little summary about CanSlim. Again, you can find the description of all of these criteria in the book. And we use a program by the name of Market Surge. It used to be called Market Smith. Before that, in the 90s, it was Data Graphs, and I've been a subscriber there for over 30 years with those guys. And we think that the research that IBD provides on their website, along with the tools such as Market Smith, are just very, very valuable, and we think that they're very, very useful. Macroeconomic analysis. Now, macro, it's a very convoluted, controversial type of, it's a controversial component because it's very, very difficult to understand all the macroeconomic factors that's going on. For example, and we're talking about things like interest rates, GDP growth, what's the Fed doing, what's going on in the underlying economy, what are the narratives there. And you have to be very careful because the market's a discounting mechanism. In the bottom of a bear market where everything looks horrible, the macroeconomic analysis, it didn't help you getting you out, and it's not going to help you getting you back in. It's just the backdrop. And the backdrop, it is important because it gives you some thematic, secular types of trends and themes. And so that does serve a useful, it serves a useful, it's important because it lets you know what's working. And for example, we've been in this theme of AI for almost all year there, and artificial intelligence, and in the semiconductor group, and in this AI build out with the data centers and the expansion of the software companies, and how AI is going to revolutionize productivity and earnings for companies. That we think that's going to be a powerful long-term secular trend that we think is going to last for a number of years from now. We think that we're just in the early innings here, but you're going to go through periods of time like now when you rest and you pull back and you rotate. And that's what's going on right now is we're sort of rotating out of those mag 7. They're kind of coming in. Nothing's broken on those. Those are just pausing. There's some rotation that's going on. And we don't really expect the market to come unglued. We do expect a pullback can come anytime because of how overbought we are. But we think that will be that would just be a period of rest that sets the stage for the second half of this year. And we have high hopes that the second half of the year is going to be very strong based on secular trends, based on the interest rate scenario that we've talked about before, and the Fed presumably cutting interest rates starting in September. And we think it's going to be it could be a very broad, very strong second half of the year after we have the obligatory pullback. And that obligatory pullback is that's what you have to be careful of, that that you don't have a major drawdown, that you're not too exposed, so that you can ride through the obligatory pullback. That is certainly coming. We use a service by the name of Hedge Eye Research. Keith McCullough, as the stem winder there, we find that he's got great input from a macroeconomic perspective. If that's something that you're interested in, you can go to the site at Hedge Eye, and they've got free trials, and we would enthusiastically endorse his service. And with that, let me turn it over to Wes. Wes is going to take you through the second half of the program, or excuse me, the first half of the program, and we'll go from there. So Wes.
Yeah, thank you. And I'll take the reins if I could share.
Yeah, stop share.
Okay.
There you go.
All right. So yeah, necessarily had to start with this image, this kind of perhaps iconic image later, years from now. Interesting developments, obviously, very interesting. So that's the big news. That was the big news on Sunday, and he's fine. So I guess that's good. But of course, we don't really care to get political here, but we got to figure out, what does it mean? What's the impact? Is there any change just from that, those gunshots that whizzed by him? And it looks like there was. So I think some of this that's going on, you can see there's a little bit more confidence, I guess, in an election outcome. Markets hate uncertainty, right? So I think perhaps it would have done the same thing if there was certainty the other way. But this is a look at the polling averages, and the RCP betting average, actually. So this is where all the people betting on this election, this is where they've settled most recently about the odds of the election. And so you can see here the Biden collapse. Presumably that was the debate night where he certainly has had a lot of people calling for him to stop. So you have that, and then you have the most recent jump in Trump's odds. People sort of rallying behind that attempt and saying, he handled himself pretty well, just while under fire. So, anyways, this is interesting, and I think there's a lot of things going on underneath the surface that I'm sure we've all seen. We've already seen solar kind of get hammered, anyways, and some of these solar stocks got crushed. Everyone's trying to figure out right now, what it means for markets. And so if markets are working under the assumption that he's going to win this presidency, That's what institutions are going to be trying to do right now, and they've already been doing it, earlier this year, trying to, play those scenarios out. But you'll see, what they come out with. I know recently a headline, he said they want to take it from 21% to 15% for the corporate tax rate, and that fueled that change from 35% to 21%. That was a large part of what fueled the rally ahead of his election in 2016. So, different things like that might matter. So we'll see. Keep an eye on this. It looks like he's got all the momentum, and um, that's kind of changing a little bit of things under the surface. So the main thing we're going to talk about is breadth is expanding, absolutely, finally, right? And we've been kind of waiting for it, and kind of under that assumption that it would happen. I wasn't exactly so worried about the narrowness or resolving to a market correction. I was, I guess, hoping for that breadth expansion. We got it, but at this point we're super overbought, right? We know that we've gone straight up. The IWM, the Russell has gone straight up quite a bit in 3-4 days. And so the question is, are we right here where we have this great 2-month, maybe hopefully longer period of a much better environment? And, my guess is yes, that we are. We're at the beginning. And so the key is just to be careful, chasing things up. But this was a serious character change in the market right here. I think we're here. I think we're at that same point again. And we'll see a lot of, we'll take a look at more charts that kind of tell us why. We just need to look for some shallow pullbacks probably to set the stage for another powerful leg higher. So this is another oscillator. The other one was looking at the New York Stock Exchange. This is the NASDAQ McClellan oscillator. The key difference here being that we're actually at a new high on that overbought condition, looking at just the NASDAQ stocks. So that, outpaced, that was the November, I think, 4th or 5th peak in the oscillator over here. And, we likely peaked today on that. So, we're looking for some kind of, momentum has to slow. You don't go up 10% without a break in 4 days. So that's what we're kind of preparing for. And it should be, normal, right? That's the thing. If we're in a different type of market, we should probably hover in this overbought area for some time if we've gotten this character change, and we think we do. So again, like I was saying, short-term overbought, looking at a different oscillators, but we see this breadth improvement, which is just very welcome here. Back above 50% of stocks above their 50-day moving averages in the NASDAQ, and that propelled it. That was a healthy environment for us when we surpassed that level. So I think this day right here actually was the day the oscillators peaked in November. And you'll notice, even after that day, when the oscillator came in and we became less overbought, we actually did kind of wedge higher for 1, 2, 3, 8 days, and then broke out even higher from that. So I think that's kind of what the position we're in right now is. We're looking at it, I think at it that way. The NASDAQ, with the heavier market caps, less volatility, really didn't have a massive pullback from the overbought levels. But the Russell did, which we can take a look at too. So that's the difference. It's these small caps that are really taking off right now. But either way, hopefully a character change that we're seeing right here, similar to what we saw 7-8 months ago. And here's a look at the stocks above their 200-day moving average in the NASDAQ. This is kind of the key difference here. We're off the lows quite a bit, of course, from the bear market lows. And now we might actually get, a real high participation bull market where stocks are all starting to become in long-term uptrends, as defined by the 200-day moving averages. So definitely welcome if more stocks are above their 200 days. We think that improves your odds of just being right. Your batting average should be improved with that. Let's see. Okay, the next breath, we'll look at this real flood of new highs that we're seeing. So this number down here is actually the net number, so it's the new highs minus the new lows. Notice the new lows drying up considerably too, at just 23 new lows. So breadth is improving. The NASDAQ index is marking time. We know that there's been a change, right? We know that we've seen mega caps coming into their 21 days, 50 days maybe. So right now we're getting that rotation, but the index is acting just totally fine. And here's the New York Stock Exchange index, a broader basket of stocks that don't have the same cap weight. And this is interesting. I guess this number is correct, but it is a massive new high day for stocks making a new high, and a really solid breakout after 3.5 months of consolidation back here. So you could see those hints kind of happening 4 days ago before the Russell really started to kick into gear. You could see the New York Stock Exchange index. You could also see the QQQE, the equal weighted Qs index, behaving much differently and breaking out of that similar 4-month consolidation right here 5 days ago. So definitely I've seen that improvement in breadth for the last week. This is a look at the weekly on the Russell. So the Russell index, has been the lagging index for the entire year. Off the lows, had a great run, but has consolidated and not gone anywhere. And finally, had this blast off, taking out that high for real, right? You probably got faked out a few times trying to buy the Russell before. And so now we have the second mouse gets the cheese, maybe the third mouse gets the cheese set up that I think Roy and I have talked about before, where you get faked out and the second time it's for real. So here we are, great follow through in 2 days. And it looks like, you're within spitting distance of new highs in this Russell index. And that would definitely be a welcome thing for us. Indexes and stocks are going to perform really, really good into all-time highs. So, we're excited for that possibility. And we think probability. One of the things I just wanted to talk about, another resource that I look at, which I think is valuable, is this guy, Jason Shapiro. I think we've mentioned it a little bit, but he talks about futures positioning. And so this blue line, he looks at this data that comes out weekly, and it shows you how speculators are positioned. And so this blue bar, this is looking at the Russell futures, and the blue bar is showing that speculators are heavily short, or were heavily short, that Russell index. So that kind of gives you a warning signal, if it's getting crowded to the downside, if positioning is getting crowded to the downside from speculators, that the more likely move is to move to the upside. So he nailed it right here. This is all about his process for trading. And I think it's something that you guys should look at too. He does a lot of things for free, but there's also his other paid services. But definitely would have been good to, a good tool in your tool belt.
Hey Wes, let me
Yeah.
give me a second. Let me pitch in. Barbara just sent a note here, and you have so Walter Deemer is an old market technician who's been around forever, and he said today and I was looking at the statistics. He's got something called the Whaley breath thrust indicator. It's very similar to Marty Zweig's thrust indicator as well. and it said that occurred today. And normally when you have breath like this, like Wes showed you how those new highs on the New York just exploded today with the breath. That leads to a sustained move, like 3 months, 6 months, a year from when it flashed, and it flashed today. So that's another feather in the cap in terms of this bull market being extended and going further than you would expect. But when you have these breath thrusts like this, that you might have just a small pullback, but those pullbacks are to be bought, they're not to be sold. So keep that in mind. While the market is very overbought when we look at the McClellan oscillator, things like that, even if we pause, this market is setting up to surge higher from the second half of the year.
Yep. Excellent. Yeah, I love those breath signals. He's got his own Walter Deemer thrust too that I know we've looked at in the past and all that. And I wanted to point out, like we talked about the shallow pullback. There was really no pullback. You can see not a QQQE, not a whole lot in just the NASDAQ from that overbought level in November. And then I know it's harder to see on this one, but you did get a kind of a sharp pullback in the Russell. It's just more volatility in general. Those stocks are more volatile. So coming off of that overbought level up here, you did have a decent pullback, probably 5% in these types of stocks. So it just depends, on the stocks you're trading. But either way, we know we want to be careful and not necessarily be, buying a whole lot today, or it's anyways. We'll talk about some general, I guess, macro things. I showed this chart last month too, and we were in the June, July, August period, entering that strongest period. Now here we are in July and August. So this says that we've got maybe a little bit of seasonality still ahead of us. We start to get careful. We'll see if this coincides. I mean, we appear to have this really strong market right now, and so the timing might coincide really nicely with the September-October pullback. Might coincide with election jitters kind of finally taking the forefront of the narrative and all that. So that election probability of 68% for Trump, I mean, to me seems kind of high. So you might see some of that 68% come in a little more uncertainty enter the market. And that's kind of that would be, a decent roadmap to be prepared for, because at some point there will be, a couple of bad days and it'll be attributed to the election and all that. But it's all about managing your positions anyway. So for now, there's a lot of signals saying right that we're in this better environment. For the macro, I know we talked about we look at Hedgeye. It's a broad, a robust model that they use as far as growth and inflation, and I think those are really the two main factors that matter in this whole thing. If you could boil it down to two things, keep it simple. Those are the two things. The problem is that the models are wrong. They're calling for acceleration in inflation. I don't think that's going to happen. They're calling for meaningful acceleration towards 4% again, which I just don't see. So that's where we certainly disagree here. But this is the leading economic index, which I look at as for growth. And I think it's important to look at this and see, okay, we just had this bear market during it was a recession in 2022, and we're still just starting the recovery. Honestly, we're really just starting that recovery, and we've got this modest GDP growth right here, which is kind of that Goldilocks that everyone keeps saying, not too hot, not too cold. And so that's what you've seen, right? 2009, that was a great year when this leading economic index bottomed. 2001, I guess I know it was probably a tale of two markets, two parts of the year, but we know 2020 sharp and then a recovery. So we're in this really early part of the recovery, still, based on these indicators. So it seems like, you're seeing these XLI, these industrials and housing and different things really outperform these last 4 days. So they're seeing something or they're expecting something. I wouldn't be surprised to see this leading economic index improve materially over the next few months, which some of these stocks are kind of telling us they're expecting to happen. And I'll touch on CPI. Usually we touch on this before the report. We had it last week, right? And so that was another positive impact. It actually came down month over month, which was kind of an expectation breaker, and we saw rates come in quite a bit. This continues to go down slowly at this point, right? And one of the things that, well, first of all, a couple things to talk about. CPI, the average since 1990, which I looked at, this is 2.7%. So we're sitting at 3% versus the 30-year average. That's not materially different, right? It would be silly to keep the brakes on the economy when we're talking about that small of a deviation. The PCE average since 1990 is 2.2%, and at that on that measure, I think we're at like 2.5%. So it appears that that's fine, and we just continue to hopefully not have to talk about it too much, but I'll keep throwing it up here because I'm nervous that as soon as I stop throwing it up, that will accelerate, and they'll throw a wrench in things. But and we've talked about this core CPI still coming down. That's driven by shelter, which we know is a super lagging indicator. This peaked a year and a half ago. Real-time rents are not that high. It's going to absolutely keep coming down, and that's what I've kind of been saying for maybe 12 months now, just about how that weight of a third of the CPI coming down over the next 12 months out from now, we're going to see it revert to this 3% longer term level. So that still that narrative still works. And then CPI versus wage growth, that's the other thing people talk about. Wage growth keeping shelter persistently high, or services persistently high. That's still, sure, it's a little bit high, but actually, there was one more quote I added on here from Powell, I think today or yesterday. He said, I think it was yesterday. So if you wait until inflation gets all the way down to 2%, you've probably waited too long. So that communication is certainly important. He backtracked, I think, in November, where he talked about how the balances or the risks were balanced between inflation and growth. There's no point in putting us into a recession just to tackle this last 0.5%. So his rhetoric has softened since November, and I just think this other comment he made couldn't have been more clear that he's not interested in in weakening the labor market just to get this last inch of inflation down. So I think that seems prudent to me. Okay, and so so we had that positive CPI report. We see this kind of break in the 1 and 2 year. There have been different episodes of people questioning whether or not rates are going to come down, how many cuts, all this, right? And so just with that other data point, the markets are still trying to figure out really how many we're going to get, and what the path of rate policy going forward. It's just everyone's trying to figure out. It's still uncertain. It's not like there's for sure going to be a cut in September still, but that's what we're trying to sniff out, and that's what markets are kind of sniffing out. So we like to look at this, these short-term rates, to see what they're signaling to us. And then the 10-year, so here's the 10-year treasury rate. That's had a meaningful breakdown since the peak in May. God, I can't remember exactly what happened here. But anyways, we've seen this downtrend with these big spikes in rates just being sold off, or I guess treasuries being bought with these various spikes. So this this looks like a benign interest rate environment, and I think from here it will be. So that would be welcome. That would be great for the 10-year. Here's a look at the FFTY, which we kind of consider our barometer um, for sort of our style, right? Our growth stocks and everything. It's rallied. It hasn't broken out to new highs. It doesn't look like the Russell exactly. There's been a lot of different things that have fueled that rally. We've seen it's in the Russell, whether it's financials or industrials or different things like that are included in the Russell, but um, should be we expect this to work meaningfully higher, this kind of this index in their style. Here's the NASDAQ and the MACD. Now we'll go over the things we always go over every month, and we see the momentum waning. We're overbought based on that MACD level. We might be getting a quote unquote sell signal here with momentum waning. It's yet to play out, but for now, the trend is up. It's a warning signal. It's kind of a warning signal about buying versus maybe holding, because of course momentum wanes. You can see it happen back here for several months while the index is powered higher. So yeah, something that we consider and definitely look at it on a daily basis, this MACD and price phase. But for now, like I mentioned with the moving averages, I mean, we are in an uptrend by all measures, short, intermediate, long term, and we just have to be careful. You can see this 50-day slope really accelerating, and when we get extended, we look at our level of extension off of the 50-day, and I know we had reached the level maybe 8.5% or so, which is a lot. So that tells you something too. And I think we on that day when it was 8.5%, it must have been this day where we had that kind of severe shot in the index.
Wes, let me interject something right here. The green line,
Okay.
guys, that's your 10 day exponential. The magenta line is the 21-day exponential. The yellow line is the 50-day. And again, we consider the market to be in a short-term uptrend when the green line is above the magenta line. You can see that where we've been in this what's known as a quote power trend for some time now. And we wanted to point out that you can see there in that April-May period of time, it got very choppy, but you can see where we actually, that big spike up right there and made new highs right before the 10-day cross below the 21 days. So we had that wicked pullback right there that Wesley's pointing out. And that was the time for you certainly to be raising cash, getting defensive, because you didn't know if this was how far this was going to travel on the downside, or what was going to be the duration. You never know the duration or the magnitude of when these moves happen. You just have to respect the trend. And so we actually went from 100% invested to almost out at the bottom, that April bottom, to fully invested right there at that beginning of May when the trend turned back positive. And that's really the way that you have to navigate through these markets. You never know, but you have to respect the trend. And now, we're in this very strong uptrend. We got the Whaley thrust. Even if the market, if the indexes pull in, look for, and the 80 line breaking out, look for the market to work significantly higher on the second half of the year. But because we're so overbought right here, we can easily come into the 21-day easily. And that would be, that'd be some short-term pain, but that pullback, particularly after the Whaley buy signal today, any pullback should be bought.
Yep, great. Thank you. Yeah. So, okay, we'll talk a little bit about breadth again. Just and we touched on the Nasdaq. Here's the S&P 500, and here's the percentage stocks about the 50. Something we watch. Huge improvement in stocks above the 50-day in a short period of time. And here's the stocks above their 200-day in the S&P 500 now at 79 or 80%. So, yep, certainly turning into hopefully a healthy long-term uptrend right here in the indexes. And the Nasdaq, let's see. Well, I think we touched on this earlier, that here's the percentage stocks above their 50 and the percentage stocks above their 200-day. So, maybe getting a broad participation tech rally in these or tech heavy rally in this Nasdaq index too. So even though maybe you're seeing some things like financials outperform the last couple of days, under the surface too, there's plenty of things in other sectors that are working too. Okay, and again, here's a look at the net new highs, and longer term, we kind of look at this on a 5-year basis, always looking at the net new high in that environment, and we all comparing the environment that we're in now versus like the last real bull market. So certainly had some have had good stretches of really healthy breadth. And okay, this number, yeah, 755, crazy high number, almost as high as what we had there in, what was that, May back then. So yeah, I mean, again, I don't know what to say about this other than that's a wow thrust up, and it's coinciding, I think, with a consolidation, and really, I mean, this has been basing for 2.5 years. So this is a real confirmation. I think in my view, it's confirmation that we're about to take off on a very good leg in the market. Okay, and the VIX, the volatility index, not a lot to say here. It's hovering below 15. It's been under 20 since the collapse in volatility at the start of this bull market. So continues to be fine. It's going to take a lot probably to make this thing break out into the 20+ level. So, for now, it's not saying much. I don't think we're complacent. I think, at least not on this measure. It's just we're in this bull market, which is a different keeps the VIX in a different kind of regime of volatility for now. Here's the National Association of Active Investment Managers survey underneath the Nasdaq index. So this is a survey conducted weekly to see how long active managers are. The last couple times it was quite a bearish signal when we exceeded 100%. We had it happen pretty consistently with a little bit of a pullback. We actually didn't happen to have that the last couple weeks, even though we exceeded 100%. So we're back at 94%. But it's something to keep an eye on. I don't love it being at 100%. It just makes you wonder, make your ears perk up a little bit, because you just want to be aware of frothiness. It's possible we're kind of getting that at the same time as we're super overbought. So that's kind of why we're saying, okay, you have to be a little cautious, right? You don't want to just chase things up right now. After a 4-day move like we've had. So, keep this in mind. Consider this when you're, making your decisions. This is getting up at higher levels of bullishness. This is the bullishness black line in a survey, and our bearishness in red down here. But you can see, if you were to make any decisions off of this, the last 7 months of this year, it's not like it would be a great timing tool by any means. So anyway, sentiment, we know we always monitor. It could be frothy, but most importantly, we're overbought. Breadth is improving, and we had this, this breadth thrust, which is interesting. And so we're absolutely bullish in this scenario, but another thing to look at, for sentiment. So here's a long-term chart of net. So bulls minus the bears. So blue down here where we have bulls outpacing the bears. Yeah, do with this what you may, but it takes bulls to have a bull market. So on a net basis, this number is not exceptionally high. In reality. Okay, and a couple more sentiment things that we'll go over. This is the put call ratio. So when we look for spikes in the put call ratio, that's when you have excessive fear in the market, because people are buying, a lot of downside protection. We had that happen in October as well. The timing wasn't exactly with the bottom, but it did give you a signal that we were, approaching a meaningful low back in October of last year. But you can see it also nailed the bottom. Actually, if you were to look at the NASDAQ index, this would have nailed the bottom in the NASDAQ, but this is the S&P 500. And for now, we're in these low levels, but I think that this is characteristic of a bull market that we're entering, because you can see where we've hovered around this red line for 2 years in the 2020 and 2021 bull market. So I do like, to see this higher, just because I think your odds are better when this is increasing. But yeah, for now, I'm gonna say it's benign. We're in a bull market. That's the most important thing to consider right now. And this is the equity put call ratio. Same thing. It looks like it's about to break into a lower level, a lower persistent level that averaged down here at the 0.5, let's say 0.5 level for the prior 2-year bull market. Okay, and this is the high yield spreads. This is the measure of credit risk in the economy. This is also telling you, okay, credit markets are healthy. There's plenty of liquidity. Liquidity is good, for asset prices. So, yep, this is not saying there's anything systemic under the surface we have to look for. So all good here. I wanted to point out this all world index, excluding the US, because it's not a US phenomenon either, right? It's not about necessarily just inflation here and the battle being almost over with that. It's not about US politics either. It's broad, it's global, and this is very timely too, just to see the rest of the world participating now too. This is telling you it's we've been broke out of the all-time highs 2 weeks ago. So this is just getting started globally as well. Okay, and then a couple more, just Bitcoin. We all, it's one of our favorite assets. We think it's going to move meaningfully higher, especially in this next leg of the bull market. It's probably one of those asset classes we're most bullish on with this launch of the new ETF, and we think just inflows working here will push this higher. And so, breaking above the 50 right here, right at it, last couple days. So something that we own and like fundamentally.
Can we, before we move on, can we talk about Bitcoin for a minute? Well,
Yeah.
why, after the halving a couple months ago, has it performed so poorly?
Really,
Everyone's saying
Michael, when you go, there's really conflicting information there. People, maybe it's one of these things that you see all the data from all the times that the halving has occurred before, but and it goes higher after the halving. However, I mean, we've seen data which suggests that it comes in first, that there's a sell-off first before, it resumes its uptrend. And maybe that's something, maybe that happened. But,
just a shakeout?
Pardon me?
In the past, and now is it just a shakeout so that the big players are getting cheaper?
Yeah, and we've had this happening, but you do have extenuating circumstances, because in the past, remember, we didn't have these ETFs, and this is, I mean, we think this is our best idea. Nvidia was our best idea for the last year and a half. This is our best idea right now, between now and year end. And it's a $1 trillion asset class now that everybody's in, from BlackRock to Fidelity to all the investment managers. They've been approved. And they're going to take positions here in this asset class. And all these, people like BlackRock that control, I think BlackRock's got, $11 trillion under management. And imagine just allocating 1 to 2% in the portfolios in Bitcoin, and that's what's going to happen. And it's a new asset class. You can go back and study what gold did when gold came off when the GLD came out. Go back and look when the GLD came out, and look at the bull market that ensued after that. We think that that's the setup. We don't know why it came in. I mean, it's no inflation hedge. It's been shown that it really hasn't been an inflation hedge. It's just a speculative asset that really tracks the NASDAQ to a degree. But, you're going to, I think you're going to see it, significantly outperform what the NASDAQ does. And it doesn't, but it's got to get to new high territory for that to happen. The question is, and we have, is how do you allocate? When do you allocate? How do you allocate here? We would like to have a 20% position in our swing trading accounts, and we've got a 12% position now. But for something that we think that can double in the next 7 to 12 months, we want to have a big, a very meaningful, sizable position there. And we think that, we think it's going to work. It's just breaking above the 50-day right now. So, any consolidations, it should set the stage for stair stepping and, going higher. We expect it to recheck the top, probably in the next month or so.
Now, if we could zoom out from a macro perspective a little bit, the American dollar is worth nothing really in real terms, and the IMF is pushing for a unified currency, which makes sense. And Bitcoin would be it. Cryptocurrency will be it, I think, in the future. If and when that happens, what will happen to the US dollar? I mean, is there a real chance that the US dollar could crash like the Greek Drago did and go down 30 cents on a dollar at some point?
I don't think so. Yeah, I don't think that's, I mean, certainly anything can happen. Remember a couple of years ago when, when oil went to zero because of the derivatives?
Yeah.
Okay, so I mean, anything can happen, but but the dollar is going to be the world's reserve currency for until it's not. And so, we don't, it's been, it's been the currency of choice for the last 50 years. Maybe it changes at some point. Maybe, maybe Bitcoin does fill that void, but
The difference now
So
though is
my
the,
take on Bitcoin is it can never be a reserve currency. No government, no ruler, no dictator will ever allow any currency that they cannot control outside within their borders. So it can
Right.
never be
Yeah.
done that way. Now it will be an asset class. Yes, you can
Yeah.
invest in it, and
Yeah.
more regulations will come in. Government will never allow anyone to get their taxes. So essentially, government will make provisions that they will take some chunk of your taxes from Bitcoin or whatever asset class that comes
Yeah.
up. But as a reserve currency, it will never happen. Now, the current, if you go and look at IMF papers, they are already doing experiment. They already did an experiment successfully done with 5 or 6 different currencies as a basket of reserve currency. Which is why they are asking China to make sure that yen is not depreciated every year. Otherwise,
and are
it will
they
not be
doing that
included.
because the world is losing faith in the American dollar because of our debt situation, which is only going to get
Here's the bottom line. No government ever wants to pay their debt because it's humongous, and that's why they keep rolling the debt. This happened in Roman Empire. If you go back in history, you'll always see that as soon as the debt starts becoming bigger and bigger, either the country goes to a war, so they don't have to pay down the debt, or they will somehow manage to reset the whole damn thing.
the reset
Which
is
is one
what
of
I'm
the
worried about.
ways they are going to the basket of currencies, so that dollar will not be the only reserve currency, because right now everything is in terms of dollar, and even US doesn't like it because it makes their job very difficult as a government.
Right.
So
That's
that's how it's all going. Go ahead.
Yogesh is making great points.
Yeah.
The point being is that you don't like. That's really sort of, we're talking about, macro considerations, and the trends got you in, and the trends should get you out. So, and you gotta, you just have to look at it that way. Follow the trend, as long as it's in an uptrend and going higher, stay there. And, when the trend changes, and when the trend changes, there's always a narrative, there's always some kind of economic backdrop, but, you don't know, you don't know what that might be. At some point, our debt is going to be, from a realistic perspective, it's going to be a problem. We're going to have to balance our budget. We're just, it's going to be a problem. But it's been, people have been talking about this for the last 30 years. When they were talking about, I had people talking about the debt situation versus GDP in 1990. And this can always, it's going to always be an issue, and it should be. But we do, we are going to be forced at some point to have fiscal, restraint, so that we have to get, we need to get a handle on our budget, and and on our debt, or it's going to be problematic long term.
But that will bode well for Bitcoin and currency, cryptocurrencies as an alternative.
I mean, we don't know where crypto goes and how it's going to evolve. I mean, obviously there, people that are out there. I wouldn't give Kathy Wood very much credibility, but people like that are saying Bitcoin will be $1 million. We have no idea. All we know, it's a new asset class. Go back and look at the GLD. When the GLD came out, that was a new ETF asset class, and a way of investing. But that's, when you look at gold over the last 30 years, it's very, very spotty in terms of the performance. And that was, before, gold was the safe haven, right? But go back and look after these bear markets. Gold didn't protect you in the 2007 to 2009 bear market, or the 2000 to 2002 bear market. gold didn't provide any hedging protection at all. And so, what I wouldn't expect Bitcoin to provide any type of protection either. We'll see what evolves, but we do know it's a new asset class. Trillions of dollars are going there. And people are coming on board. Larry Fink from BlackRock was against Bitcoin for 5 years, and then they just boom. They're the largest owner of Bitcoin from an investment management perspective. People have the ability and the right to change their view, and just follow the trend. That's all I can say. Follow the trend. Money's flowing here. It's a big money, but you're going to have your stops in and protect your downside. And the larger your position is, the more that you'll have, the more that you should certainly follow your stops, of course.
Hey, Roy, I think these money managers, or Fidelities and BlackRock, and they all wanted to provide an option for their clients to be able to invest in these cryptos.
Yes.
And why not take some share of the market? Okay, but they are just like, so but the issue with Bitcoin or Ethereum or these whatever 38,000 cryptos is they do not have any basis, or so all these bankruptcies that have happened in recent, this Mount Cox, which is what caused the fall in Bitcoin and Ethereum. Okay, and these things will continue, and it's like somebody can over leverage. It's just like leverage in the traditional markets. If somebody over leverages something, that thing can fail, and once you have a block of this thing failing, that creates shakiness and people want to come out, and then this momentum plays. It creates a downward momentum, auto selling. It's so it's an algorithmic selling and buying that happens. So rest is all, and from a currency standpoint, like Yogesh said, there is many countries who went through, like Greek went through few years back through a debt crisis. Turkey went through. You could get like 60% interest if you invested in Turkish bond, and I mean, everything is now normalized, but I mean, this thing, there is a reset of this debt, and it's all political. The US is more stable, and this currency thing, they've tried for many years, but nobody can replace the US dollar. So it's not going to happen. It didn't happen for multiple decades. So it's difficult.
Thank you, Amir. Great point.
It didn't happen for multiple decades. The experiment is already done from 2012 to 2016, successfully done. I read a report on it. I'll see if I can find it again. And now they are laying out a plan to go forward and make it real. So I wouldn't be wondering if it happens in the next 5 to 10 years. And that doesn't mean it has any impact on us. It will certainly not have any impact on anyone as such, any one person or people living in a country. It will have impact in terms of transactions, international transactions between nations. That is where it will impact. It will certainly not impact, the immediate impact will not be there for us at all. No businesses, unless you are like Apple, who does businesses in multiple countries. They may have to shift certain hedging and positioning of their currencies because they work in different countries. So for them, there will be a little bit of impact. But as an individual investors, we will not feel any impact of it. The bigger issue comes when a particular country, and Greece and Portugal and all these small countries don't make any, I mean, they're not even on the map when you talk about debt, right? The debt about the US debt or Japanese debt is humongous if you go and look at it, and UK and China and other countries, the big countries. Right. If one of those nations default on their debt, that is like a financial Armageddon, literally. And that affects every nation. Nobody will be spared at that time. But that only happens during war times. Usually it will get rolled always, which is why nations don't like to pay their debts. They will always roll their debt because they do, usually big nations don't go bankrupt.
True, but
So that's
if US dollar falls, that has a significant impact on bonds, and bond market in the US is bigger than the stock market. So
correct.
that
If think about it like this, okay, let's assume for a minute that inflation is coming down and suddenly it takes a U-turn, just the way it did in 70s, and it starts moving higher and it goes double digits. Imagine what will happen next once it starts going higher.
Yeah, let's move forward. We are definitely, we're discussing all the macro factors here. And again, we're not really here to discuss all the macro factors. We're here to, look at the, individual stocks and so forth. So let's go ahead and move to, Wes, did we have the last slide there? Are we done on?
Well, no, I just put gold in here,
Okay.
of course. I don't
And
know.
then we'll get on, in the individual stocks and so forth. Yeah, go ahead, Wes.
Well, I don't know. I think the chart speaks for itself.
Yep.
But we've been talking about that for months. Another fifth mouse gets the cheese. Fake breakout, several years, 15 years. Yeah, so that probably the real deal for all these things we're talking about.
Okay, and are we done?
That is it.
Okay, guys, let's move. Let me share my screen. Now let's get to really the second half of the program, and this is what we're really here to discuss and take a look at individual stocks. So let's take a look at this, see what we come up with. Let me share my screen, and boom, boom. Okay, here we go. Okay, are you guys looking at the NASDAQ right now? I just need a show of hands. Okay, good. Okay, so here's the NASDAQ. And again, we have this, quote, this technical setup that we call a power trend. And this was developed by Justin Nielsen and Mike Webster from IBD. And it's just interesting when you go back and look at these various times, various bull and bear market cycles. And, we call it, it's really an easy dollar environment when you're in a power trend. And, we are in this power trend right now. And, we are alert and we're watching to see where this, what happens here, in the market. But we are having a little slowdown in terms of a lack of momentum right now. Let me just show you what that looks like on a different chart. I'm pulling up the chart here on the NASDAQ. I'm using a program by the name of AIQ, Artificial Intelligence Quotient Program, that I've been using for over 30 years. Do you guys see this chart? Are you reading it right now? Do you see it on your screen?
Yes.
Okay, good. So now realize that we're in this power trend. We're in an uptrend. The trend is your friend. The trend's positive. So, we have a bias to be, we want to be, 100% long in periods of time like this. But notice the momentum. Okay, well, I've got the moving average convergence divergence indicator. You can see where we had this buy signal at the end of April. And, we've been in the momentum notice where the momentum actually has been waning for months, but the index has made higher highs. See, this is just, again, so this is just like relative strength. It's an anecdotal indicator. Notice when you've been on a sell signal, or, we've been trending down, but the index has made new highs. Notice here that now we're in the MACD is close to rolling over, where that's basically telling you the momentum is waning a little bit on NASDAQ. And another component, it's one element of the moving average convergence divergence indicator called the price phase. Notice where we peaked, and I pay attention to this, particularly at market tops. Notice that we peaked right here on the price phase, right there. And then the next day we're down. And this did suggest, and this was only a week ago, that we're due to have we're due to come in, we're due to have a correction, and be careful. The market could have a short-term pullback at any point. And we made a 13-week new high, we rolled over, and we expected the market to turn down. Price phase still lower, but we have subsequently held above this 10-day moving average. So we're above this 10-day moving average, but the momentum is somewhat waning. So you have to be, you've got to be careful and understand what's going on there. So that's the underlying backdrop in terms of the momentum. While the IWM is had this powerful move up. So, I read that this is the biggest 4-day move we've had in the in the Russell 2000 ever. And, we put some exposure on that first day, and we were looking to get, more aggressive here on the rotation. And we actually used the TNA, which is the 3 times the IWM. But this was the signal to tell you that there's potential rotation possible. So you're seeing the MACD roll over, and you're seeing you're seeing the price phase turnover on the NASDAQ, and the rotation is taking place here, along with the Dow today, and and so you're getting that rotation. It doesn't mean that we're set up for a major fall, but we should have a pullback, but the pullback is going to be brief, but it's possible that it could be nasty. You could have like a 3-day pullback and the Nasdaq's down 500. And that is, and in the meantime, you're going to see, if something like that would happen, it would be normal to expect, the IWM to come in, but you buy the IWM if it comes in. This is a major breakout here. And, we think that that this will eventually take out the highs, on the Russell 2000. So, position yourself, look for the stocks. The stocks will steer you which direction to go. But we think that, that's what's going on under the hood right now. Rotation is taking place in the small caps. We would like to have bigger exposure here, but you can't, after the biggest 4-day move in history, you can't just pile in here. But you get a 2 to 3 to 4 or 5-day pullback, and you should buy it. And this is this is happening at the same time that the new high list is expanding dramatically. So, Wes showed you that new high, the new highs on the New York, which we had the biggest probably, all year today, the biggest net positioning there. And that's going to power this market higher. But for you to beat the averages, you're going to have, individual stocks that perform much better than the averages. So this was a way to get some exposure, but you're going to see this. You can see like the CanSlim IBD 50 stocks start to really outperform here as the Mag 7 pauses and gets its breath. It doesn't mean that monies can come totally out of the Mag 7. And normally when from the beginning of a market cycle, it ends with the group that brought it, that launched it, that started the market, the powerful move there. It's going to end there. So I don't think this bull market, that we're in right now is going to end until you see a blow off in the AI stocks. But, we're pausing, we're rotating, but money's going to come back into the NVIDIAs and, and the semiconductor stocks that are going to, power this AI transformation, across, the planet. But that's what's going on right now. So let's take a look. We wanted to take a look at the stocks that we're going to share with you what we own, because we think we have a number of these leaders. And this is actually what we own right here. So you can take a snapshot. We've got 18 stocks in the portfolio right now. And, IBIT is our biggest position, and we'll go through a number of these. So, some of these are familiar to you, others aren't, but we think we have a great portfolio that's, that right now with what we have, that's going to lead in the second half of the year. But we've got cash, particularly in our swing trading accounts. So we're waiting for fresh numbers. We're waiting for fresh breakouts on the earnings announcement. So, we're keeping some cash behind because we're going to find a couple of new leaders that break out with powerful accumulation, and we want to have cash to be able to buy those. So let's just go through. We'll go through, the technicals so you can, see yourself. IBIT, which is an ETF that, this ETF follows Bitcoin pretty much dollar for dollar. And you can see that we've been in this short-term downtrend. Now, we don't know why why did Bitcoin explode in the last 3 days? Is it because Trump was shot and he survived? And, and he's got a 70% chance of winning now. And he's a Bitcoin advocate. So his presence, he's going to actually be at the Nashville Bitcoin symposium that starts, I think, in 9 days. And so you got a number of commingling factors that's taking place. You got this new asset class, you got the broad market that's participating, and you got a new asset class that is close, doesn't have far to go to get into new high territory and break out. And what we think here is that when you break out here, it's game on. So, I expect this to be, $60 to $80 by the end of the year, but it's got to get into new high territory. But, this is the beginning, just like that IWM had a 4-5 day move, and you had this blast off. So it's possible that we get the blast off on the right side here, right now. But there's the setup. It's above the 50-day moving average. It's going to be bought. And the way to handle it is, I really considered adding more of it today. But, it's not a perfect setup here after it's moved. Now, if it would come into the 10-day and then turn up, we would get more aggressive. But I don't know if it's going to come in, at all, from here. But, it's setting up great. And it doesn't have far to go. This Tesla had this powerful move from just out of the blue. And, we get some kind of move like that. That changed the whole direction, the trend in Tesla from being in a downtrend to now in a stage 2 uptrend in the course of, 9 trading days. So it's, expect that for Bitcoin. NVIDIA, which has the most powerful earnings.
Roy, just out of curiosity,
Yeah.
when did you add, or when did you buy the Bitcoin ETF?
We have traded it. We did buy it just to put everything in context. We actually, when the ETF came out, and this is from our Twitter disclosures, as well as during our comments during this period, we actually bought Bitcoin, the ETF, the first time on this reversal up that day right there. And then we sold it 2 days later, right there. We took a loss 2 days later. And then we bought it back right here when it turned again. And then we pressed it right there. And we got this great move from here to here. And we sold it somewhere up. We sold it up somewhere up in here. And we've been trading around the position. We bought it back. And we do have I do believe we're profitable in it. on this last leg, the last foray into it. And, so,
So
I'm
you
sure.
didn't sell when it gapped down, that where you have the mouse right now, when it gapped down, you didn't sell?
Let me see, that 1, 2, 3, 4, 5, 6, 7, 8 days ago. I'm not sure if we sold it, or Wes, what did we do right there? Is Wes on the call? Wes,
No, I am.
did we sell, did we sell it on this gap down or down here? I mean,
Look.
I think we probably sold it like right here. I can't remember. We've been trading around the position, but we've got a full position in it, and we're up in it, and and we're going to get bigger exposure. So it was definitely in this little downtrend here, and then now it rallied back up, and we didn't have a loss enough that we kicked it, I don't think, on this last turn, but I believe we are green in the position now. So, the last leg. So NVIDIA, we do still have it in our core accounts, but we did sell it on this reversal day in our swing trading accounts. We sold 100% of it right there. So, and we bought it, we bought this thing back before the move here at 100, got this big move here. We actually sold it. We sold it on that reversal day. And then we ended up buying some back on the pullback. And we sold that in the trading account a couple of days ago. And we still have, a 5, 6, 7% position that with the low cost basis in the position. We don't think it's going to necessarily come apart, but it could go to the 50-day. I mean, we might be challenged, and have to reduce some risk if it doesn't hold, but there's nothing wrong with it technically. But, of course, this is the most powerful earnings stock that we see in the universe. And I don't think this move is going to be over until it goes substantially higher, until the earnings really peak. And with their visibility, it's going to be, it should peak much higher, over the next year and a half and so forth. But, there's going to be periods where it comes in, goes up, pulls in, and, that's what we're dealing with. Okay, KD, Kyndryl, we mentioned this. This is a consulting company. It's a spinoff of IBM, and we just we pressed this today in our swing trading accounts. We bought it like right in here after the last earnings report. And what got our attention is it's doing $16 billion in revenues. And it reminds us of the setup with like VRT that we had a big winner in last year. And actually the beginning, a part of this year as well. And we actually bought this and pressed it today on breaking the downtrend line. But $16 billion in revenues. And look at the market cap. The market cap's only $6 billion, and they're going to have great growth the next 2 years. So we think this is very, very undervalued. And it reminds us when we got into VRT that nobody knew about the company. This should be a $100 stock. I mean, just, if it just trades, at a 1 price to sales, you can get a double or triple out of it. So, breaking the downtrend line, there's the old high 2860. So, if you own this, it took out that pivot right there. You buy it on the pullback, as it turns up, you put your position on, and you could press it at 2750. You could press it at 2860. But this is one of those rotational plays where it's a really quote, a small cap stock, $6 billion. We view it as very undervalued, that reacted great to the earnings report. Microsoft, of course, the leading software company on the planet. And you can see, you've got this, you've got a brief little pullback. Nothing's wrong here, but it certainly can come into the 50-day. But, we don't think that this is going to roll over by any stretch of the imagination. And, where, it drops 20%. You've had just a little bit of a pullback here. And, you do have support. Now, it could certainly go to the 50-day on a, pullback, on a big pullback in the market. But there's nothing wrong with, with the stock. The relative strength, though, you can see this rotation that's taking place. So it is pausing and resting here. You're going to need, earnings are in 7 days. So that's going to dictate, the next move in the market. And they should have good things to say. Microsoft should have great things to say regarding, the cloud, and also regarding, AI. And they, Microsoft and NVIDIA are the #1 beneficiaries of companies that are monetizing this whole AI, thematic play that we're talking about. So there's Microsoft. Lilly, as you guys know, that's they make Mounjaro, Zepbound, as NVO makes Ozempic, and Wegovy. So you got a major breakout. We have a very nice position here. We think it goes substantially higher, over the next year. And so there's Lilly. Transmedics, the blood organ company. This is one of our larger positions here. It's a top 5 position for us. You can see the breakout on the last earnings, and they've got the technology. If you can pull the company up, this technology's terrific. They have demonstrated that their warm blood mechanisms, they save lives. The organs last longer. This is really a transportation company as well, because they've got a number of planes in their arsenal now where they can fly from destination to destination quicker, and provide the organs in a more quicker before the organs presumably die. They can use them and so forth. You can see the stock is right on the cusp of breaking out to new highs, and you can see the earnings report. The last earnings reports were fantastic, triple digit, and that's what's powering this stock ahead. This would be one of those small caps with only a $5 billion market cap. So you can see this is, rotation is taking place. But look, this is what you want to focus on. Those stocks that are close to making all-time highs, 52-week highs and all-time highs. And this fits the bill, and looks fantastic. Okay, Netflix, we're going to hold this into the number. Netflix is doing a lot of great things in their business. You can see where it's come back, it's pulled back to the 50-day. So we'll just see what the earnings report. You see what happens when they report. Earnings are going to be in 2 days, and we'll see if you can, if that will set the stage for another run breaking out. And that's what you would want to see. You'd want to see the stock go to new highs on the earnings report. And, something like that, and what you might be looking for. That's what we're looking for. So we're looking for stocks that break out like this on the earnings report, just like that. And we suggest that you should do the same thing. We're going to be talking about a lot of different stocks, tonight, but that's the action that you want to see. So we're actually saving money in our saving up money in our swing trading account. I think we've got about a 30% cash position there, so we can put on 3 10% positions, and we're just waiting for them, and they're going to happen during the earnings period. And we think that you can get a move like this, and that move then, and if we get a move like that, think about the tailwinds that we've got right now, and the secular trend of the market. If we get a move like that, I would anticipate us, going from 100% invested to sell right into it. If we get a 20% move in all these, we're going to be selling into that strength. So, because then we've got that September, October period that Wes pointed out, and we have had a number of charts before that have shown the correlation between the seasonality play right here. So that's what we're looking for. But, the stock needs to make a new high on the earnings report. Robinhood, which is one of our, it's a top 5 idea for us that, and it's an investment advisor. It's a bull market play. Plus, give me 1 second here. Let me pull it up. Okay, there we go. And this is classic. So you've got a stock with triple digit numbers, which is what you want. Remember, CanSlim, you're looking for stocks that have, 25% earnings growth. But look at, Transmedics just had a 500% earnings quarter, last quarter. We're looking for, something. We're looking for something that's, that the institutions get all over. And there's your, there's the breakout of the downtrend line. And we actually had a 10% position. We got kicked out of half, and we bought it back in the last 2 days. This is a 10% position for us. So it's one of our bigger positions. And you can see the stock follow through, and it's breaking out 24, 28. This is a top 5 idea for us. And when you look at it on the monthly, this is where we have it going. We have it going to 40. So, it's 25. We think it goes to 40 on this run, which, suggests, significant upside. And, but they have to deliver on their results. NVO, it's same, setup as Lilly. We do like Lilly more than NVO. It's acting, it's stronger. You can obviously see that it's stronger, but right now it hasn't done anything wrong, and it's just basing right here. So if you add, what's nice is if you have positions right there, that's where you press it. If you take out that pivot at 148.15, we would press that position. We would add, we'd buy it on the pullback here, and then press it right there at 148.15 if we didn't own it. But we are owners of the position. Next, GE. So incidentally, we all know about the requirement, the demand, the energy requirements, the power consumption requirements of what is it going to take to run AI, and it's going to be require a lot of power, a lot of electricity, but we also need to modernize the grid, and which we know it's antiquated. GE Verona, which was a spinoff from GE, they're in everything, and I think you've got to be careful with wind and solar, because I think there's a strong chance that that Trump is going to be elected now, and he's going to reverse this EV mandate that all cars need to be EV over the in the next 10 years. He's going to reverse that. And, and he's going to, and he's going to drill most of the power that's, that generates electricity. It's from gas. And Wes was showing me the breakdown of that yesterday, but it's going to be only, it's gas primarily that run, the turbines and so forth. But this is actually holding up. This is holding up great. We own this position. We'll probably press it, going into new high territory, which could happen tomorrow. So, it's IPO, new name with really good numbers. Look at these numbers. They have great numbers. And it's, this isn't a small company. So this is a company that's doing, $40 billion in revenues with a market cap of only 50 billion. So that's, we look at things like that in terms of how can the way the institutions look at it, how can a style like this double? Yes, it can go from 50 billion to 100 billion, based on, and be cheap, and still be cheap based on its sales. So this is setting up an IPO. I love IPOs that break out and go to new highs. And so it's a new name, and this could easily be a $300 stock. But a couple of days ago, we have been a little bit concerned because the leaders are VST. Look how this has come in, and look how this VST has come in, and it's below the 50-day, and CEG, which is really in the nuclear area. Look at this break today. So that's a bad break today after this was leading. So there's the rotation that's taken place. And then who else is in the group? NRG. So that's, so it's just, they're consolidating, but they're a little toppy. But yet you have GEV that's not demonstrating that, yet. Okay, now ASML is going to be reporting tomorrow. So they've got the technology they have got the state-of-the-art lithography technology that TSM is using. They just sold a machine to TSM, Taiwan Semi. And I think their machines are, like $300 million. They're not cheap. So they're going to report tomorrow. This is a group. I'm very interested to see what the report is. And we are holding it into the number. We've got a 5% position. But, if there's a good number, you're going to see this potentially go to new highs. And, a move to new highs should be bought tomorrow, right there. So if this thing breaks out on the number with the guidance, that potentially should be bought tomorrow. We'd love to see this thing gap up, 100 points, be up 10% on big volume tomorrow. That would suggest to us to press the position. So that's potentially is going to occur tomorrow morning. So watch that. CrowdStrike is a little bit slippery. So, they are the leader. Most of you guys are aware that Google is buying a new, they're in talks to acquire a security company for $23 billion that's going to put a little pressure on CrowdStrike and Palo Alto and Fortinet and Zscaler. But this is the leader right here. So what you want to see, it hasn't done anything wrong here, but what's nice when you're watching, when you look at these setups, guys, and from a trading perspective, and we don't own this in the swing trading account. I almost bought it today, but I didn't because I'm afraid that it goes to the 50-day. And so if it goes to the 50-day tomorrow, and fills in the gap, then I'm watching that. This is something I want to get heavy in on the swing trading account, but I want to see it turn. So if it could hit the 50-day and bounce off the 50, or it could take out, you can take out yesterday's high. Notice see, notice I have an alert here. So that's where you buy it. So if this thing reverse back down, if it reverses back up tomorrow and takes that out right there, that would be a solid entry. So watch that. And we're looking at the nuances here, guys. We look at them day to day and make the case for that stock each day. And so there's the setup right there. The setup on this, if you've been waiting to get into it, wait and see if we could come into the 50-day right here and then bounce off that, or you can take it you can take this level out that I have on the alert. Watch for that to occur. Meta, which has one of the top AI generative programs, out there is coming into the 50-day. See, nothing's wrong here. I don't like this break right there, but we do have a position here, but the setup is here. See, if we are resting with all these magnificent 7 stocks, it's going to give you a setup, and that setup is to buy it right there. See on the breakout. So if you come, you're in no man's land right in here, but a break of this, if we come in and rotate and these do a little bit better, that's where you buy it right there. You take out that pivot, that's where you buy Meta. Amazon, the same setup. That's where you add to the position. Right there, breaking into new high territory. So these consolidations are great because it gives you time to be ready and be aware and be proactive so that you know what to do. Your work should be done at night, and there shouldn't be a lot of work during the day. Like, just seeing how stocks are setting up and just day trading and things like that. It's best to do your work at night, have have the places where you're going to buy. You can put buy stops in, and have your, if you're not watching the market closely, have your place for your sell stops. And, the work that you do at night, your homework should set the stage. Trading and investing should be boring. It should be boring. It shouldn't be. This is not a place to go for action. This isn't a casino. This is a place to build your wealth by using precise timing to enter positions and exit positions, and systematically build your equity curve. And the more boring that it is, the less trading you do, better. And the big money is always made in positioning, in concentrated positions, and then holding on those positions as long as they're working. Western Digital, of course, this AI is going to require a lot of memory. You can see the false breakout right there. Right there, the consolidation coming in. You can see where I have the alerts, and these alerts are where we're pressing. So you take out that level there, you should be adding. You take out 81.55, you can add. So so if you want a 10% position in something like that, you can buy 2.5, like on the pullback. Then you can go taking that level out right there, press it up to 5. You take that 81.55, go to 10, and then and just sit. And it's an $80 great price, $80 stock that's going to certainly go to 100 to 120, over the next 6 months. Look at the earnings period. This is the first quarter where they've exploded in terms of their earnings. But look at this, guys. earnings are going to be up $8 next year. That's 1,300% next year. So this isn't something that's over. So AI is not over. Now it can pause, it can consolidate, it can pull back, but these are powerful, powerful numbers. And you get earnings growth like that, and this stock, who's the leader, of course, in the data storage area. They're a leader along with PSTG that we used to own. We don't own it any longer. But this has got the fundamental underpinnings to be a major, major winner the second half of the year.
How are those estimates? How do they come about?
I think these estimates are coming from, I think, FactSet. That's who IBD gets their earnings numbers from, FactSet, I believe.
Hey, Roy, before you go on to Google, I have a quick question about Meta.
Okay.
So this is more from a fundamental standpoint, not really a technical, although technically it has come down a little bit, Meta had banned Trump and Facebook and all that kind of stuff.
Yeah.
And now Trump has come out and said he is not going to ban TikTok. Biden and all them were against TikTok. They wanted to eliminate TikTok. But Trump says, no, competition is good. TikTok's going to stick around. Ever since the failed assassination attempt, the Meta has been going south. Does it not scare you if TikTok is not banned, and with all this Trump animosity towards Meta, is that not something that you look for as a red flag?
Well, this is a red flag. Now we're long it. Now this is the red flag. But the idea that it's set up, came back, and there's your buy point. See right there above the 50-day. And that's probably where we bought it, where we bought Meta, probably right there. This break here, I don't like that at all, but it did come back, and it's set up with this nice little VCP, and now it's rolling over. Now, regarding TikTok, I'm not a fan. I'm not a fan of TikTok at all, because they are controlled by the Chinese Communist Party. But I'm not going to get into like the politics and Trump's got DGT, his social media group and so forth. But this is just I think this is just a rotation out of the Mag 7. So you're getting that rotation. Now it needs to hold. You don't want it to, earnings are in 15 days. But they did have a powerful earnings report right here, right there, and you got this move there. But it needs to go to new highs on the earnings report, Christian. But I'm not I don't like Meta at all as a company, because I don't believe in censorship, and and I don't like what Meta has done. I don't like what Google has done. But they are indispensable in terms of what they provide. Meta owns Instagram, WhatsApp, and they're a powerful part of our social experience across the planet. But you've got 3 moves down. It needs to turn up, but I'm not a great fan. But it does need to. It should hold right here at the 50-day. But I'm looking. You don't want you don't want to get stuck in all these Mag 7 stocks where they just pause and other things are working. So you want to be looking at the stocks making new highs, and particularly on what I'm saying, fresh new numbers that come out. That's what you want to key on. Like I only have a couple of stocks that have come out that we're following. That and actually let me see on the Joseph is he actually posted on this stock right here where you had a 10-300 and the stock broke out, the stock that broke out on the earnings news. And this is of course in that area, in terms of the build out, in the cloud, build out in the data centers and so forth. This primarily went up because they gave guidance on their data center build outs and so forth, but it hasn't pulled back at all. So, Wes and I, we're looking every we have a mandate with us to look every night from now through earnings period to see, okay, what's up 10% after market. And that, and we're looking at buying potentially those stocks that are up 10%, particularly if it's at a new high. Notice here, see, you took out that 46.50 area, and and there's the pivot, and it hasn't come in at all. So a setup like this should be bought.
Hey, Roy,
Yeah.
I just want to let you know that I'm long this. I'm still long it, kind of just riding it.
Great. Thank you, Joseph. And you did buy it probably this day, right, Joseph?
Yes, on that day.
Yeah. So I want to buy it. So I skipped it, and missed it. But I want to buy it on a pullback to the 10-day. And so, if we have a little pullback in the market, you can buy it here, because if you buy it here, the 10 days, 5.6%. So, so I don't want to have a position and I'm down 6% just on a normal pullback of just one day. So, but if you have a profit like Joseph has, you double up right there on the pullback, and you double up on the pullback right there. So you have a cushion. So you're actually able to, increase your position with less risk. So that's how you handle something like that. But GLW is one of the few stocks so far that I've seen that
I think Jeff's another one.
Jeff,
JEF.
Jeff is another one. So Jeff, see, look at this. There's the breakout. And so this is kind of this is after the fact as well, but it's kind of, we haven't missed this stuff, guys, because I only have 5 stocks that had a great earnings report that's got my attention, but I didn't buy them. I didn't buy them here because we're already in things, but that's the setup. You want to see stocks that break out on a big number, and there's that 10-300, well, 288% right there on that stock, on the earnings, and the volume was up. The volume's up 288%. The stock was up. That stock was up that day. It says 6%, but you follow through on the upside right there. There's, Goldman Sachs had a great report. There's Goldman Sachs, which reported yesterday. And then, LNTH was a name from the past, moved up. Look at this, taking out, but we were sitting here looking at it, but it was up, this stock was up like $40, and we didn't know why. And so you just can't arbitrarily buy something if you don't know the numbers, if you don't know the news. But here they got approval for Medicare reimbursement for their imaging agents. So you got the government, Medicare is going to pay for their image, for imaging agents. They actually announced something yesterday where they actually bought a company that specializes in Alzheimer's imaging agent, which is going to be the standard of care as well. But notice the volume. See, this is what you want to, that's what you're keying off. Okay, who's up on big volume? That's an institutional footprint. But, after a move like that, you certainly couldn't buy it wouldn't have, you just couldn't buy it, after a move like that, you couldn't buy it on day two, like that, when the thing's up, it didn't come in, it didn't give you an opportunity. So we'll see what happens with that in the pullback. But that's the action, guys, that you want to see. And we have two more. We have three more. There's Google, self-explanatory, same thing that we've been talking about. Google in the group, can come to the 50-day. If it comes in the 50-day, that when it breaks out, that breaking above that pivot means it's going to work even better right there. And then the last two, and then we'll turn it over to you guys. Trade Desk, which this is a play for getting rid of cable programming. And, this is the leader in, in that area. And you can see it's we own this position. We actually have right here, we have a buy stop to press it right there at 102, I think 102.25 right there. So, so we have a position here at 102.25. We're going to take this to 10% into new high territory. And, so that's the setup. That's the setup there. And the last one is Hilton. And we actually added this. We added this yesterday. There's that, there's Hilton. Obviously, people were getting out, traveling, bookings been great. The cruise ships are coming on. We're just getting breath, guys. So, we're just getting breath, and that's occurring. But, the move that we're looking for this kind of move. See, a move for about 2 months after the earnings report from, all these new companies. And if that occurs, that's going to set you up for that. It's going to be perfect. We are going to pull back, and we're going to probably pull back 10%. And, it'd be great to, like something like this. See, it'd be great to get a move like this and then dodge this, dodge that, and then, and then put your positions back on, buy the weakness in September, October. That's kind of how we have it framed, in our mind. And the only difference between that and our swing trading account is we added a position in Uber today. It's a slow mover, but look at this taking out. See the pivot 73.60. So we've got a 5% position there, and it's taking out 73.60. It should move to the old highs above 80 before the next earnings report. But there, none of these may work, but we are showing you these are perfect setups that I'm discussing. So that's a perfect setup. Pull back, consolidated, inside day came in. Now it took that 73.60 out. Boom, that's a buy. And we bought a little bit of this Credo today.
Roy, just a question regarding Uber. These spikes and kind of this wide and loose. Isn't it something that worries you?
What wide and loose? What spikes are you referring to?
Well, in this little consolidation, the space, 73, that base exactly. You see the ups and downs, the spikes. Is that not something that bothers you? And then of course the overhead from 2 or 3 months ago.
Yeah, but remember that this is all. You can look. This is almost like a cup and handle. See, this is almost like a cup. And we're handling right now. Let me see pattern recognition. They just have it as just a consolidation. This isn't wide and loose. This is getting tight. So, now, we owned this stock before and we sold it. We owned this stock before and sold it probably right there. And so we've passed on this stock. And this stock may be down because obviously Tesla and the robo-taxis, and we have no idea what's going to happen with the robo-taxis. Musk has been talking about it for years, and he pushed it back to October. But let me just tell you, and Wes and I were talking about this, if Uber would set up some type of partnership. And they could be working, they could be doing this on the, in back rooms right now. If they set up some type of partnership with Uber, this is going to get hot. When you see it. So, again, the volume, follow the volume. That's what you need to, that's what you need to concentrate on. Follow the volume. But, if there's some type of new news, that's going to be a new catalyst. And, I'm worried about Uber because of the Tesla overhang. But, it's setting up nice. It has consolidated. back over the 50, going sideways. Now it's taking that out. It's a perfect setup as far as I'm concerned, right here. And it's not in the new high territory. This is really sort of an early cheat. Minervini calls it, would call this like an early cheat, where, it's come in. Now the 10-day has crossed the 21-day. And, it's really, an early cheat. So, it's a different setup. It's a different type of setup. And let me see what it looks like here. And see, this is your early cheat where the 10-day is crossing the 21-day. And the break back above the 50-day, now going sideways. And then taking, and then taking this consolidation out. You could have bought it right there, and then it got tight, came in here 2 days. And, it's a little bit extended. It did gap up, some, but, this is certainly a legitimate, legitimate setup, legitimate, buy. And, I really wanted to buy this BLOK. So this is, this is a blockchain ETF. And Wes and I talked about it, but look at the volume. It's only trading $8 million a day. So it just doesn't have the volume. We'd be 25% of the volume if we just put a position on. So that's it's way thin for us. But this is this is an ETF that's a blockchain ETF that happens to own IBD or Bitcoin, Coinbase, MicroStrategy, and also this little speculative company that we did buy today, CORZ. So it's a miner, and this CORZ, and yesterday was really your buy point. And but look how this is trading. Look, this is trading $120 million a day, 12 million shares, versus that BLOK traded 190,000 shares. So there's the breakout right there, triple digit numbers. It's in this universe. You've got triple digit numbers. And, that's where, momentum came in right there. That's institutional money. Institutional money right there. And it's at an all-time high territory. So you can get a few of these. And I would have bought that BLOK. I mean, I really haven't seen this nice cup and handle. And I almost bought it yesterday, but looked at it and said, man, I can't get a position. I mean, we need to buy, 100,000 shares. I'm half the volume. I can't buy something and I'm half the volume, but the follow through, but this is certainly something that you should have on your radar. You could buy a couple, you could put, I mean, I can't put 5 million in it, but you could put, you could put 100 grand in it, for sure. So, keep your eyes peeled here, but, we're in IBD and we're in, we have this small position in this CORZ, but, this Mr. Breaking the downtrend line today, that's really, that's a buy signal right there. So you have you got these pivots there. But we're limiting our Bitcoin position to be primarily in Bitcoin. We're not playing Solana. We're not playing Ether. We're not playing any of those. We're playing. It's like we didn't play AMD. NVIDIA was the leader. The difference, all you need is the leader. You don't need AMD. You just need NVIDIA. You don't need Ethereum. You just need Bitcoin. That's all you need. You need the leader in the whole space. That's all you need. So that's pretty much, that's the discussion as far as what we're looking at right now. And, again, there are going to be stocks that present themselves, on the earnings, So we're watching that. So you do have, this is the breadth. Look, you've got financials. Who do you buy here? If you're in financials, you could buy the XLF, or you could buy Goldman Sachs, or you could buy JP Morgan. You buy the leaders, there, but XL, notice here, see, you've been going sideways for 4 months. There's the breakout yesterday. So this just happened yesterday. So, if we think there's a sustained move higher, this isn't a 2-day move. This just broke out today. These are the Dow Industrials. And see, this is the move, guys, that we're looking for. See right here, when you broke out to, new high territory, and you got this move. Guys, this is what's coming. See, this move from here to here, that's what's coming. And it's in, it's in all these sectors. We're a big fan of home builders. And this was a clear sell, down here only 5 days ago, when people were worried about, supply constraints, inventory of homes. But we think that, that there's a big major theme here. And this just broke out. See, this just broke out of that base today. So, this is the stuff that you can buy on pullbacks, but, or you can delve into the individual names, or you can buy some of these ETFs. We are looking for the individual names, and they will present themselves, like KBH.
Roy, something that wasn't on your list, I'm surprised not to see on there, was a stock I was going to ask you about, which was CrowdStrike.
We do own it in our core accounts, and we did talk about it. So it's a leader, and if you don't have it, we have an alert right there where you buy it there, and you press it at 395. And we do have it in our core accounts, but I'm looking at potentially adding it, as a swing trade, and depending on what happens in the next couple of days. But, I do expect, a pretty vicious, just out of the blue. I don't know what the catalyst might be, but because we still have, the big mega cap stocks are still a week away, 7 to 10 days away from reporting. But I'm looking for, just a sort of a brutal couple of day pullback that just kind of that instills enough fear that sets the stage for this next leg that we're talking about. But we don't, we have very few growth stocks that have announced their earnings reports. So we don't know who these fresh names are going to be. There's going to be 10 to 20 setups, that are during this earnings season that are going to set up. And we don't have we don't own one stock yet with a fresh earnings number. These are all based on, the earnings from last quarter. And, remember the cockroach theory that companies that typically warn or miss their numbers, they typically miss it the second time. But in the companies that do well, and they typically do well the next quarter as well. That's so we don't have a lot of fresh names or numbers to look at yet. But they're going to, they're going to be here between now and our next meetup group in the next 3 weeks. There's going to probably we'll probably have we might own 10 different companies over the next 3 weeks than we own like right now. A lot of stuff can happen in terms of rotation. But, the market is showing its strength, though. That's the point that that I'm conveying is, look, this thing just broke out today, but again, we had this huge, Whaley thrust today. So this is the kind of stuff that's behind. This went on all over the place today on the on the ETFs, not in individual names necessarily, but in these ETFs. And so this is a changing character. So I'm getting pretty excited, and I'm getting pretty excited. And we're up we're up great this year. I think our swing trading account's up 42% from January 1st. And we're up 25% in the core account, which has more stocks in it. And I think we're setting a stage where we can tack on another 25% between now and the end of the year. I mean, I think it's going to be, it's setting a stage to have a great year. And, anytime you're up 50%, I mean, that's, or more, that's just, that's a terrific year. And this is, I mean, you're going to have it this year if we play everything right. What other stocks, guys, would you like to pull up?
Can you
Rory,
put
is there any
FedEx
reason
on
why
the
you like-
daily
I'm sorry.
Yeah, great breakout.
and actually on the monthly too?
Okay, yeah. So was that Joseph?
Yeah.
Yeah. See, this is a perfect. Did you buy this yesterday, Joseph, or did you have it?
No, I missed this one, but I'm just pointing it out.
Yeah. So look at the. There's the. I had an alert right here to hold. There's the breakout. You know what? It looks great. I mean, there's the daily. There's the breakout. There's the volume. And look at this. This is about to go into all-time high territory, that's huge. So these stocks, I've got 200 alerts there. These stocks that go into all-time high territory, when they go into all-time high territory, you get moves like that. Look, that's from 120 to 280, and so this is just about to go into new high territory. Obviously, it's a blue chip stock, looks fantastic. And obviously, what they're doing at the expense of UPS. The UPS dog, Federal Express winner. And it just broke out. Yeah, go ahead.
I own FedEx. I bought on the gap up, the earnings gap up. I was just I was a bit worried because it seems like FedEx is a little bit the lone wolf. I mean, if you look at the transport sector, there's an ETF. I forgot the ticker symbol, but it seems like there's FedEx and there's nobody. What is your take on this lone wolf theory?
I think and I definitely agree with you. And I didn't act on it either because maybe it's similarly, I was looking at it the same way, but I think it was, when did you buy it? Let me ask you, did you buy it right there?
I bought it on the earnings gap up. Yes, correct. Yes. And I was going to edit the yesterday, but I was kind of, I don't have a big profit cushion, so I didn't feel like adding. Yeah, and so you bought it perfectly. You should have pressed it. Like when you get a winner like that, and notice this, when it came into the 10-day, the great stocks don't even come in on day 2. Like you don't take out the day one low. The great stock, and so if the stock comes, if it comes in and takes out the low the second day, then normally it's not going to work. Now, some do, and you get faked out, but that was a perfect buy. But, you look at this and you say it's a $300 stock. Where can it go? Well, it's about to go into new to high territory. It can go from 300 to 400. And clearly, you see it perfectly. You're not, you're taking a very professional approach because you're not worried about a $300 stock. It could go to 600. So that was a great buy. So this is one of the few
that just happened, you know, on the.
What's your take on the lone wolf theory?
I think I'd buy the stock, you know, even if it's the only one. You know, you do like to see multiple stocks in the group that lead, but you know, it's definitely buy, but that wouldn't prevent me from buying the stock. But for whatever reason, I didn't buy the stock. I didn't buy the stock yesterday. And
yeah, because William O'Neill always says, you know, you want to have kind of a peer group, while Mark Minervini says, you know, stocks sector index, you know, so he doesn't care if there are other stocks or not, or if it's the lone wolf. So that's why my question, you know, because kind of Mark Minervini and William O'Neill seem to kind of diverge a little bit on that topic.
It is a little bit different now. Minervini, you know, and who's a friend of Wes and I. I spoke at Minervini's annual gala last December. I was one of his special guests on his stage, and we talked about a lot of this stuff. But O'Neill, I do watch to see what's moving up in the industry groups, and really David Ryan does a lot of that too, to see, well, what are the industry groups doing and who's moving up. And like right here, there's 197 industry groups, and who's number one. And here's your industry groups. And so, from just training, I do watch to see what's moving up, in the groups, what industry groups are moving up. And Minervini is always, he doesn't do any of that. Minervini's modus operandi is stocks first. And he does, and he'll quickly rebuke you. And he says, man, don't even look at the indexes, but I think that's his philosophy. I like to look, I want to see what the indexes are doing, because I know that, you're going to find very few stocks that work when the indexes are in downtrends. I prefer to sit out, and he's sitting out too, but he will tell you, he'll give you a macro narrative, but he doesn't like to be pigeonholed. But he talks about stocks, tactics, feedback, all the time. And again, he's at the top of my list in terms of providing intelligent commentary regarding on the market. And he's just now he's got something called stock trading environment model, and that just went from red to orange today, which definitely bodes well. But he doesn't, like in the market, when the market's at the market bottom, he's always late in terms of getting in, because you're not going to have stocks making new highs that are in bases. You're going to have stocks that are broken. And so I believe, I have found that it's best just to buy, something like buy the indexes when the market is in a bear market and it's being purged, because you don't know who's going to work. The setups come later, but the best way to get exposure, to get that first move off the bottom, is definitely with the indexes. Either the Qs or the SPY, or really those two vehicles. And you could use the TQQQ or the leveraged spider as well. But that's the difference. But here you can see semiconductors, they're the leading group, computer data storage, and so forth. And these are going to show up, by the way, the market surge growth 250. This is all you can see. This is based on, you can see who the leading industry groups are, and you can see what's moving up. But when they get number one, the number one stock in the number one group, you got to be careful, because that, that could, that's happening, right now in terms of they're taking a reprieve. So these are definitely the leaders, NVIDIA, AV, Broadcom, ARM, and so there's that Pure Storage that we used to own, but we are in Western Digital now, but PSTG. So there's going to be a number of these. See, and this is just sort of consolidating. And there's your downtrend line. There's your buy point right there. So this is, what we rotate, and you have some of these things that are working, some of these that are going to be basing. These are going to set up great opportunities, but they're going to probably come with your earnings report. You're going to need an earnings report, but this is why we sold this on our swing trading accounts on that big nasty reversal and big reversal. And there's the top, there's a potential double top. It's not in trouble until it takes that out. But you don't really want to ride it from here to the 50-day. Which is 10.4%. See, I don't want to ride this down 10%. I'm looking for this thing to hold and turn up. Then you can put a stop in right there, if you get it.
Roy, if you're interested in NVIDIA, would it be a good idea to maybe put a secured put on it, get it at a cheaper price and collect a premium?
You could. We don't do any options, but that's an interesting. I think it's an effective way of getting into position. Yes, selling the puts, bringing in the option, and then getting. That's definitely a workable strategy.
What do you think would be a good strike? Maybe 110.
I would take it. I mean, with the premium, I'd do it at the 50-day probably, which is 115, 114.
That's what I was thinking. Yeah.
I think that's a great strategy.
Good. Couple quick questions. The first, why do you have a preference over IBIT over ARC-B or any of the other ETFs for
the biggest? We own GPTC. This has been the vehicle that we used, but this is they're charging 1.5%, where IBIT and Fidelity, FBTC, I wouldn't use ARC at all.
No, why not?
But they're the second tier. They're second tier. The trading liquidity? Like for example, IBIT is trading, 25 million shares a day, and 22 times 4. It's trading this amount. What's that? Is that what's 23 million times 40? Is that 800 million? 800 million, or is that 8 billion? I'm not sure, but you got IBIT. This is trading the most, and then you've got FBTC. That's next. This is $11 billion. IBIT is 21 billion. What's the symbol for ARCs? Bitcoin?
ARKB.
ARKB. AB?
No, ARK-B. ARKB.
ARKB. Man, see, this isn't ARK 21 shares Bitcoin. They don't even have the market cap here. I don't know, but it's a smaller. We're not getting good data here, but I would use IBIT. I wouldn't do GBTC that charging 1.5%, but IBIT's charging 25 basis points, a quarter of 1%. Same thing with Fidelity. So We own both of these. We own Fidelity and IBIT, both of these, just in different accounts.
And what do you think about, or anybody, Riot, which is up about 30% in the past?
Oh,
few days?
you know, Riot, Mara's the leader. So we did buy CORZ, a small position today. And look at the numbers here. So you've got triple digit numbers. And look at the revenue numbers. See, 141, 179, doing 179 million in the quarter with a $2 billion market cap. Now take a look at Mara, doing the same numbers, but a $7 billion market cap. If CORZ is valued the same way as Mara, then you got a triple on CORZ. And then Riot, $3 billion market cap. And look how small these now, I don't know these companies. I don't know the intricacies, the difference between Riot and Mara, nor do I care. But I'm looking for the leader. Okay, I see that's the institutional money flowing into it. You do have look at the volume there, and you have got this move up, but you have all this overhead.
Yeah.
And I'd prefer, if I'm gonna be in the group, I want one with no overhead. There's the one that's no overhead. And we just looked at if this is valued the same way as Mara, then this should be a $30 stock. And no overhead, and and you got overhead on Riot, you got overhead on HUT, and not as much. There's the old high right there. But the CORZ we view as the leader in the group, so that's the one I think you should own if and I don't really like the group because I don't understand. I don't know what's going to happen with the halving, and what's going to happen with miner productivity, and how much money are they going to work when it's harder to mine, and the payoff in the I don't know. I don't know all the intricacies and the hash rate and all this kind of stuff. I'm looking at purely from this is where the momentum is. This is money is flowing into the asset class. Money's flowing here. I'm following the money.
Okay, good. Thanks.
A big difference between the one you just mentioned and Riot and Mara is that Mara and Riot are pure Bitcoin mining plays, whereas Core Scientific, in addition to Bitcoin mining, they do hosting services, especially they provide data center hosting services. Another interesting candidate is Iris Energy. If you put on Iris Energy, I think it's IREN, because they offer AI services. So they kind of diversify a little bit, and that's why you probably can't compare them 100%. I think, and I own most of them, by the way, I think Marathon and Riot and HUT are pure Bitcoin mining plays, and the others, they have diversified.
No, this is very interesting. You had this, you had this nice move here. See, you got this nice move, consolidation, and then this is acting pretty good. It hit my screen. See where the ants, where it was up 13 out of 15 straight days. The ants hit on the indicator right there. Which big institutional ownership during this period right there. So I have seen this 99 relative strength. So it is on my screens, and this is that's a big earnings acceleration next year. That's a big earnings number next year if it in fact is real.
So regarding these Bitcoin, like Riot and Mara, I mean, essentially they're just like you're leveraging Bitcoin essentially. So like, would you rather just buy like the 2 times leverage Bitcoin ETF instead, so you don't have to worry about like a share offering or something?
Well, I do have, I do own this personally in another account. It just, I've got a number of accounts out there. So I do own a lot of this that I bought, in the last week. And I own a lot of it.
Okay.
Just out of curiosity, Roy, why would you be buying the Bitcoin ETF rather than actual Bitcoin? Because the thing with the ETF is it can, if Bitcoin comes down on the weekend sharply, like say minus 10% because of X or Y that happens, well, then on Monday, good luck with that, So why don't you own the actual coin?
Well, we can't, the only place that, that you can buy it. Well, first of all, we have to, you buy it at Coinbase or, or Robinhood. The fees are, outrageous. I have a Coinbase account, but I haven't been active in it. But I have it there in case I want to, in case like on the weekends, like you said, and it's got a way of gapping down and gapping up, and it's very volatile. It trades 24 hours. And, we can't, no brokerage firm can buy actual Bitcoin yet. Goldman Sachs, Wells Fargo, no one, anybody that's got a retail, you can't buy it at Fidelity, you can't buy it at Schwab, you can't buy the actual Bitcoin. But I would buy actual Bitcoin if it was available. But, this is the next best thing. We're forced into owning the ETF.
Ellie's just about to be back in just a minute.
Thank you.
Do you buy stocks like bearish to bullish reversal, like something like Shopify? It is below all the short-term moving averages, but it is now sitting at 200 SMA, and it is filling the gap. So there is plenty of upside.
That's a legitimate buy here. This is in a very weak group. The relative strength is horrible. We typically want to we buy stocks where the relative strength is 85 and higher normally. And if you go back and you look at what we own, like where's the relative strength? So Microsoft, there's Bitcoin. I mean, they're 80s, but the majority normally it's 85 and higher. That when we go back and look historically, 85 is pretty much the minimum that we normally look at. You can see we have Microsoft, which is 83, Bitcoin 84, but normally we look at 85 and higher because we're not, the bigger move, it's not going to be in Shopify from here. The bigger move is going to be something, making, you can get a bigger move in something like Federal Express, that's going into all-time high territory than something like a Shopify. But this is what's known as a moving average under and back above the 200-day buy signal. I mean, there's a buy signal confirmed with volume. This is a pocket pivot, what's known as a pocket pivot. So this was a buy signal on Shopify today. Earnings are in 15 days. It was probably upgraded today, probably more than likely. And
yes.
There's but it's just, it's a way, there's nothing wrong with it, but it's not going to be your fastest horse. So there's nothing wrong with the setup like that. It's just not, it's not in our not in our wheelhouse. But we actually tried Shopify before. Look at that breakout. I don't know, I can't remember, but we've been in this stock and then it rolled over. You broke hard right there. And we wouldn't look at that volume on the downside. Now this is wide and loose right here all the way down. Now it's trying to repair the damage.
So you in the IBD classification, Palantir and the Magnite, they are in the same industry. So I am assuming you will buy these two because they are at the breaker.
Yeah, Palantir and who?
Magnite, MGNI.
Oh, yeah, MGNI. So Palantir, we have mostly a hate relationship with Palantir. We have tried this a number. There's your breakout. We love Alex Karp, and we love him as a CEO. There's the breakout right there, false breakout. There's a breakout right there, false breakout. Here's a breakout here, didn't go very far, rolled over. There's earnings. There's earnings. There, you got hammered the next day, rug pull. Oh, that's the day before earnings. Then you lost 20% overnight. And earnings are in 20 days. I'm worn out with Palantir until the earnings number. And we thought that this stock would take out the highs and double from there. And it very well might. But no, this thing is so, look at this, look how choppy this is. It's almost untradeable. But it looks fine on the weekly. Look at that nice cup and handle on the weekly. But we haven't had much luck with this. Wesley loves it. He owns it personally. But I've been snake bit on it too. Maybe this next earnings report in 20 days, but I have to see the number. I've got to see the number. And they have to have accelerating numbers. These numbers, 600 million to 634 million. Man, 5% growth, not even 4% growth sequentially doesn't do it for me. I mean, I want the fastest horse out there. I want the numbers like NVIDIA. I want triple digit numbers, not this growing 5% sequential. And look, 8 cents to 8 cents, that, they're not making any real money here. But I am watching it.
Other one, Magnite.
Actually, this is one that was I owned this a few years ago, back maybe in 2020, and they're in the advertising digital advertising, and they haven't had they bought another company, they bought their competitor, so this has been a pretty wild stock. So it is going into new high territory now. We own, like I said, we own TTD, which is which is a competitor of these guys. TTD's they are the leader in the digital advertising space. So we own TTD versus, we don't rather own TTD, which, look at the difference in the chart than Magnite. Look, so this is really tightening up, getting tight versus MGNI. The $2 billion company versus TTD, which is a 50 billion. See, 2 billion versus 50 billion. This is the leader right here. And it's about to, and we own it, and there's where that's where you press it right there. And so, if you see this stock up to, taking that out at 1, it's going to do it tomorrow, more than likely. That's going to trigger, that should be bought. That should be bought and pressed, taking that level out right there tomorrow.
You manage money, but you follow Ken Slim methodology. But in this methodology, most of the portfolio is skewed towards high growth stocks. So it looks like 2 or 3 sectors. The whole portfolio is maybe in 3 sectors. So how do you have a conversation with your clients? It looked like a sector fund.
Man, I'm looking at, I don't care where it is. I don't care. I want to be concentrated. I want to be, our year, when we go back and look, the majority of the gains came from NVIDIA, this year. And that's, that's in one sector. I mean, I want to be in the hottest, the best growth sector out there. I don't care where it is. And it's going to typically be, these are going to be CanSlim type stocks. But I want to be concentrated in just only a couple of sectors. I don't want to be diversified in, IBD has 33 sectors and there's 197 industry groups. I want to be in the top 40 industry groups, more than likely the top 10. And, I want to be concentrated, in the top 10 industry groups and, and just a couple of sectors. I don't want to be in 33 sectors.
Roy, can you hear me?
Yes.
This is Bill calling in. Bill Will.
Hey, Bill Will. There's my guy.
I need your look at a stock that I just gotten very heavy in recently. And I bought it because it was setting up right. And I kept adding to it on the way up. And it's now gotten to a point where I'm not sure I want to buy anymore. But I want you to put a chart up and tell me what you think of this story. And I'll give you some more details why we need to keep an eye on this stock.
Okay.
The symbol is IWM, Russell 2000 Index. Yep. As you know, I manage a lot of money personally, so I have to be in very liquid stuff. And I'm trying to buy stocks that I can hold for 1 year or more, so I can possibly make a long-term gain on it. So I started buying this IWM in the fourth quarter, and I had a hedge fund I was in last year that had a massive gain in last December, all short-term realized. So I decided I had so many taxes to pay this year and to write checks to the government that I had to sell my initial position in IWM to raise the money to pay taxes. So, but anyway, I decided to get the thing set up so well, and I like the way I like to buy stocks where there's a massive breakout from a very good pattern with a massive amount of volume on the upside. And so when IWM turned around here in the last several weeks, it was very obvious to me it might be setting up for something big. And I started buying it at about 195, again at 200, and I bought more at 210. And my last purchase was about 212. It's about 224 today. And I'd like to know what should I be thinking about? I want to have something highly liquid because I don't want to own but 10 stocks. And I've got a full position in this thing now. And I just need to get your advice on how to manage this huge gain and how to manage and I've got some other ideas. I'm thinking about doing a result of this. And that is starting to look for individual stocks that are setting up ready for big breakouts. And I think we're going to have a lot of opportunities in what I call mid-range stocks and stocks. So anyway, those are some thoughts for tonight.
Boy, man, that's, Bill, you're 92, right?
What's that?
You're
I'm
92.
93 now. I'm still trading full time, but I don't trade as much as I used to because I don't want to own more than 10 stocks, and I've got a huge portfolio.
Guys, Bill and I go way back, and we try to have lunch often. Like we try to have lunch every couple of months, and he's probably, he's one of the guys man, I've been doing this 37 years. Rarely do I find somebody that's done it significantly longer than me that's still doing it. And Bill Williamson's your guy. Bill, I love it. I mean, there's the volume to break out. We took a position, and we took a 5% position on that breakout right there. And, I'd like to have more. This based on a technical picture, when you look at it on the monthly and just the back of the envelope, you can see the old high. This translates to about $300. That we should get a move on this to $300. And this is, I'm not planning on I'd like to, we have 5%. So that means we have a 15% position in IWM. We have the we have the TNA. So we have we bought the TNA right here. It's on my Twitter account. When you guys look, we bought it right there at 40 something. And now it hasn't given us an opportunity to press it. It's just going straight up. So I'm looking at this, and Wes and I were talking about this. You should look, the old high is 100. And I think you're going to see that. And then I think you're going, if we get a sustainable bull market here that lasts, and we're in a bull market, we think it's going to last certainly another year. From here, I think we're probably this time next summer, you probably will be, we can't guess, but it's going to probably, when I look at the long-term trends and match them up with the secular trend, it suggests that we're going to peak this time next year, that the real move takes place, and we peak sometime next year when a confluence of fundamental factors happen and the market's peaking and the market's hot and all that. We're going to sell right into it. But you have the TNA. We're not going to touch this. We think it can double from where it is, and the IWM, of course, which is unleveraged. This suggests that this is going to be like a $300 position, over $300, in the next year. So I love it. I think this is, and incidentally, we have on our ETF model, we got a sell signal for selling a third of our spider about a week ago. It's on our Twitter feed. Well, we just got notification yesterday to put it back in, but we haven't put we have a third that we're going to put back in to either the spider and we did put a little bit in the TNA, but we're also looking at the MDY, the mid cap. But we're looking at, with the market being overbought like this, but you have the Whaley thrust indicator. Wes and I are trying to make a decision. Where do we come back, and we put put a third back into the spider. But this IWM, look at the volume. This is powerful. This is where the money is right here. And this is really this is in that FFTY type universe, CanSlim type universe. So, if it comes in, we're not selling into this strength. We're looking at, if it comes in back here at some point, if it comes in 3 to 5 days and then turns up, we would add to it, Bill. So, your cost basis is a lot. We're in this essentially at 209, and you've got it way down here. You're in it a lot better than we are, down here, these levels. So, I think I definitely would have this as the way that you're talking. This would be a top 10 holding. Hold on. This thing is going high with this volume. Man, this is big. This is big institutional support. So, this is the kind of thing where you could put your whole account here. I feel like you'll be up 20% a year from here. And, and of course, we're talking about millions and millions of dollars, millions and millions and millions of dollars that, I think it's a slam dunk to get 20% from here, from here. So, I think it was orchestrated great. I think you got in it great. It's one of my favorite setups. How do I get more in it? You can't buy anymore. It's too extended here, but I will buy the pullback, Bill. Are you still there?
He missed that whole speech.
Man, he missed the whole thing.
What is an entry point? And when you say you'll buy the pullback on this, what entry point are you looking at?
I'd like to see it. When you get a powerful move like this, let me just show you. It's going to probably only come into the 5-day or 10-day. So, okay, let me see. Bill probably hit his button to talk to him and he got out of Zoom. Okay, so take a look at it this way. And so there's the breakout. And let's change this. I normally use the 10-day, but let's just use the 5-day. And this, guys, this is a tactic when you have a powerful thrust like we're having here. Many of these stocks only come back to the 5-day. Okay, so and I actually show you this. We'll use NVIDIA as an example. The pullback right here to the 5-day. In this case, it's 215. So it's 224 right now. So at 215. I'd be looking at buying it at 215. There's your setup. Buy it on the pullback at 215. So using that 5-day, normally I'm looking at using a 10-day for the pullback. But see, look at this. See this NVIDIA. This is a 5-day. Look how nicely it held this 5-day. See, from this whole move from here to here. The 5-day, it was using that 5-day as a support. And normally I use a 10-day, but when you get some of these tigers by the tail, look at this NVIDIA here. See, that's the 5-day. You got kicked out. It's the 5-day the whole way. And that is a short term, very short term. We normally use the 10-day, but the 10-day, you need time to catch up. So the 10-day on let me see. What are we looking at? We're looking at
NVIDIA.
No, what was the other one?
TNA.
IWM.
TNA.
Yeah. So the IWM. So the 10 days way down here. See at 210. I'd be a buyer. I'm looking at it there. I'd look at it there, but I'd say it's going to hold the 5-day, not the 10-day, because it's so powerful. The breakout is so powerful. Bill, you lost me. We lost you. Yeah, I talked about 10 minutes answering your question. I love it. I think it goes much higher. Bill, you're mute. I think you're mute. Do you hear me?
Would you use the same principle for the TNA, which is the 3-time, or would you go back to 15 days?
I'd use the 5-day.
Yeah.
And TNA on that pullback. And let me change it to, oops. Guys, you might get it too. Like you might get it in the next 5 days. We're as overbought as we are, again, you come in 5 days and it comes in and you get a little scary reversal. 43.69. See, from 50 to 43 to 44. I'd buy it right there on the pullback, right there. The 5-day.
If you're so bullish on IWM and IBIT, why don't you use the leveraged products? Why wouldn't you buy TNA and the leveraged Bitcoin? Why when you're so bullish you don't do that?
Just because I'm managing other people's money and it's not just mine, so it smooths some of the volatility out. If I had a small account and or just my account, if it's my money, I'll put it all in one stock. I've had $1 million in one stock many times, and but there's a fiduciary element there where you're trying to squeeze out as much returns as you can get, as you can achieve, but there's got to be that diversification type of consideration, so that's why. But if it's my, I mean, I have another, you know, I've got a few, you know, I got 4 or 5 accounts, and you know, one account that I have, I've got 100% of the account in BITX, 2 times Bitcoin. But we're not doing 2 times Bitcoin. I wouldn't buy 2 times Bitcoin for a client. So, but we do, you know, again, we have a 5% position, the TNA, but you know, we normally don't do, I wouldn't use leverage. I mean, you know, with margin, you can get the same. I'd rather use margin in a non-leveraged vehicle and just margin it up than, you know, than use a lot of these leveraged ETFs or leveraged, you know, stocks and so forth. So that's why. But you know, it's a matter of risk tolerance, a matter of what you're comfortable with. Can you sleep at night with your whole account in, you know, 2 or 3 stocks? You know, I can, but most people can't.
I
So
can't
that's
sleep
why
at night. I can't sleep at night when I'm in cash.
well, I know this. You got FOMO, right? You know, you don't concentrate, and then you have FOMO if you're not in there, right? I get you. Okay. Guys, what else you have? You've got some great questions. What other stocks, or you got stocks that are hitting your screens? What are you looking at? We're gonna do this. We're gonna win this battle together.
What about
ADI? Oh, sorry.
ADI. ADI. Wow. I mean, looks good. I mean, you know, it's not perfect with this, you know, with this base here, you know, that's 240 to 223. I mean, it's okay, but you know, but this is, I think, if you go back and you look at the new high list, all these stocks potentially can work. So when you know, with new high, you know, your new high list, there's your buy list, guys. And any of these can work, and it's working. So you want,
The earnings are not great. The earnings, you know, it's like, I don't
yeah,
know, what's 2024.
Maybe, you know, and you do, I mean, obviously you do see this in a number of stocks when the numbers aren't there. Maybe the numbers are coming, you know. Again, you know, in this I don't think it's over in this semiconductor area. You know, this analog, you know, mixed signal ICs, that's a unique area, you know, as well. ONTO. This is sort of in that area a little bit. You have a few of these that are working, but you know, the numbers might not be there, but the numbers might be coming. Look at this, see 3 negative quarters, and then you have your first quarter. Maybe this is going to be a good quarter for ADI with guidance moving, you know, with guidance in the future earnings. You'll find out in 36 days. But there's the last earnings report, good, the consolidation. I would expect a really good earnings report. I would expect this stock to be higher.
Are you looking at SMPS at all, Roy?
Sorry, Roy. I just quickly want to circle back to ADI. Today's breakout, for example, was on rather low volume. And the day before yesterday, so Friday, it broke out and squatted. So I don't know. There are a few yellow flags, I would say.
Yeah, there's definitely yellow flags. I mean, the base, I mean, the base there, you know, it's not great, but it's okay, you know, and
It's just better merchandise out there at this point.
yeah, good point. Yep. You know, when you don't know, when you don't know what the numbers are coming and you're waiting to see, you know, I don't really, I typically avoid, if it doesn't have the numbers that I'm looking for, then I typically pass on it. You know, in my view, that was a apropos comment regarding I think there's better merchandise in this ADI. It looks fine, but it looks like it's working, and I think it's going to work. But I think there's better merchandise. Nobody's mentioned APP. This is software company. This has got this has got pretty solid earnings. Tried to make a new high, reversed. This is like a little bit choppy, but the numbers on this stock are great. APPF, software company, APPF. This is a leader in that real estate software. They do everything from rentals to houses. Real estate company. They're the real estate cloud property management company. So this stock's got really good numbers, great chart. So versus an ADI, see, I'm looking, these numbers attract me. You see, so I'm, the relative strength. Well, the ADI's got, I'm sure, good relative strength of 90 on this company.
Roy, do you have an opinion on Celestica?
Yeah, I'm not sure about the business, but the action certainly is great. So this has got a great chart. Just broke out. I've got to cut some of I've got a lot of alerts here, guys. I've got to cut down some of my alerts. Looks great. This is a buy right here. It looks great. They're in that, they're in the same this contract manufacturing. The margins on this company are like real small, or, the margins are tiny, but obviously, look at this nice uptrend, and the pullbacks are, that's what you want to see on the pullbacks. And then you can see this nice little base here. It looks great. Earnings are in 8 days though. So, I wouldn't hold it into the number if I don't have a cushion, but it's a buy. But you could buy, you could buy this thing right here, and it might be $70, in the next week, and then you got 8 days, and then you've got a cushion. I mean, looks great. 99 earnings per share rank. I've definitely seen it. 99.99. And actually, David Ryan told me, years and years ago, he said, man, some of his best winners when he won the U.S. Investment Championship were 99.99 stocks, and it's a 99.99 stock, and there's not that many of them.
Hey, Roy, can you take a look at UTHR?
Yeah. Yeah, we haven't talked about any biotechs, have we? I was looking, let me see. Breaking out today earnings. Okay, so now this is okay, and again, XBI, that's into the biotech. Look at, see, this is like getting in gear. This has got our attention. It's starting to, it breaks out here at 103. So the biotech area, XBI, BBH, look at that breakout right there on BBH, the IBD. And then look at that. See, look, this is like, look at this breakout. And this, you could get some great leadership here. And let's take a look at Uther. Looks great. So it's one of these biotechs that's profitable. And, profitable, good numbers, $14 billion. It's wedging upward. So, it is like, this is an ascending base. It's an ascending base, is extended, but, it looks great. Earnings are in 15 days. You have a few of these, like, well, any other question on this UTHR? Relative strengths, like coming down a little bit. The numbers are good. It's profitable. What's the weekly and monthly? Look at this. Looks great on the monthly. It's definitely it looks great. Looks good. And there are a couple other in the group. You got Vertex, VRTX, same kind of setup on, you know, in the biotech area. This is Vertex, looks fantastic. You know, not great projections there, but you know, this is a pretty big company, 126 billion market cap. That's profitable. So you can see I've got an alert right there. Like there's your buy point that day on that one. You've had this MDGL that's setting up. They don't have numbers, but the stock was hitting my screens. And by the way, ALNY report in a week. And if earnings are in what, 15 days, Wes and I are considering, earnings are negative, but you know, they've got doing 2 billion in revenues, and they had very positive results from a phase 2 or phase 3 results, and got it and powered the stock higher from right there based on the volume. And this, sometimes when you have these ants like this, they come back to the 21 day, and you can see it hit the 10-day today. If this pulls back to the 21 day, I will buy it right now. You can see where I've got that trend line. So the 21 day, if it comes in, I will be a buyer right there in this one, ALNY, because the volume, the product mix, and some of these ants, sometimes they come in right there to the, you know, 21 day. I mentioned this stock. I want to point this out. This is a stock. Remember, I told you that you don't want to violate when these stocks break out on volume like this. You don't want it to violate the day one low. I actually bought this stock personally on day two, and got a position and got stopped out right that day, right at the low, because it was an expectation breaker. It should have held like the way that Corning held and the way that some of these others held. It's, you know, they should not come in. If you get this 10-300 where stocks gap up big on big volume, that's what you want to see, but it should not take out the low of the gap. That's a sell signal. And I sold it right there, and then, you know, the stock proceeded to almost go up. I'm out of the stock, and then, you know, they have a compound that a GLP-1 compound that mirrors what Ozempic and Lilly, what they do. And so I'm not that much of a fan, but I did get it involved because they announced that they were putting that product on the market, but Lilly has subsequently announced that they're suing all these guys. So that's too much litigation risk.
How this Hims and Hers are any different from WW Weight Watcher? They're doing the same thing now.
Well, I don't know what Weight Watchers, if they're do they have an obesity drug product that they're selling?
They bought a company like a pharmacy kind of thing, which they now and they hired nurses so that they can subscribe to this Ozempic kind of thing.
What is Weight Watchers? What's
WW? It's horrible.
It's WW? Yeah.
Yes.
Boy, that looks horrible. Man, that's a company that's going bankrupt quick. So that's, just by the leader, I think maybe Dan mentioned something before. We had no, you want to see, normally you want to see like two leaders. Like you got Ozemp, you got NVO and Lilly. You got two leaders. In the, in the semiconductor area, you got probably four. There are four. You got NVIDIA. If you're going to buy semis, you buy ARM or NVIDIA or Micron or AVGO. That's what you buy. And so those are the four big leaders. And so you would like to have like a couple, you'd like to have, just like Coca-Cola and Pepsi, Burger King and McDonald's. You'd like to have like at least you'd like to have two. But if you don't have two, and the stock is setting up, that wouldn't prevent me from buying it necessarily.
Don't you worry about
How
arms?
is SMCI?
Pardon me?
Don't you worry about arms concentration with 85% of the holding owned by SoftBank?
No, I don't.
How is SMCI?
Who's that?
SMCI?
Oh yeah.
Supermicro.
Now this is interesting. Very interesting. This is pretty wide and loose. And I mentioned this on Twitter, where this is one that regrettably we didn't play, but but it had this kind of major earnings blowout. They pre-announced, right? Here's what they did. They pre-announced, and then the earnings were released a few days later. But you had this great breakout. This could have been a life changer right here. Particularly from an individual investor. If you got all your money, you see it, put all your money in a stock like this, and you doubled or tripled your net worth. And that can change your life. And we missed it. And anyway, you can see this very wide and loose, and it reminds me a little bit of Teladoc at the top, and Teladoc when it peaked, and Zoom when it peaked. But I don't think it's over with this one. But earnings are in 21 days. It's by far the leader in the server area for data centers. They are the leader. And they gave great, and the CEO, if you go back and you read their commentary from the earnings report, you couldn't be more bullish. You just couldn't be more bullish. And there's, but you're in this funky consolidation. It tried to go yesterday, see right there, tried to go yesterday, failed. I think I think you're going to see a move. I think you can see a move up here where it's going to recheck the highs. You can get, this thing's can go from 900 to 1100 or something like that. I think it's got one more leg in it, and depending on what the quarter's in 21 days will dictate. Will it come up here and make a double top, or will it take out 1230? They'll probably split it. That's coming.
Didn't Supermicron go through a similar consolidation phase last year? If you look at the second half of last year, and then all of a sudden it broke out.
Yeah, who's that? Who?
Supermicron computers, the stock that you just show. Look at the second half of last year, and you'll see it went sideways for about 6 months, and then it skyrocketed. So maybe we see something similar now.
Yeah, and it's interesting, because if you go back and you take a look back here before it broke out, let's take a look at it. Look how this is real choppy and wide and everything, correct? So let's change the date to before it took off. Change the date to January, say 17th. Then take a look, say January 01. Yeah, see, look how wide and loose. Look at that. See, look how wide and loose. Look, you're in this great uptrend, which is what you want to see. Then it just got crazy. What? Look how, man, you couldn't trade this, but then it broke out, right? And so maybe it's doing this kind of pattern, but it's, you're going to have to get something to get it going. And look at this. See, it came all the way back and rechecked the high. And you're going to, it needs to, it needs to just, needs to make an uptrend and, and then we'll see what happens with the earnings. I don't think it's over. I think it's because I don't think, the data center build out's going to last, I think, a couple of years. And these are the leaders with the best numbers. And you got an easy comparison coming up. I'm intrigued with it. See, I've got all these alerts on it. Like, where I had an alert to buy it yesterday and I didn't buy it yesterday. We have a little bit of it. I mean, a little tiny bit. But if it can get in gear, I'm interested in it. I definitely would watch it with those powerful numbers. It could get going. It's definitely, I mean, it's unusual. It's an anomaly. It's wide and loose here, but if it sets up firm, firms up, it could be interesting.
I have a different kind of question. Do you know any other source which provide these earnings table like market search on the chart, like the way you have it right now on your chart at the bottom?
Earning stability?
Earnings table, like these the last at the bottom, these earning tables.
Yeah, what's your question about them?
Do you know any other source which provide these kind of thing? It's only unique to market search.
Let me see. I pay. It is fairly expensive. I mean, I think I pay like $1,500 to $1,800 for this, but it's worth it. I love the data that I can get. I love the visualization. I mean, you have other charting services. I mean, you've got stock charts, but I don't know anybody that has the fundamental data on the chart like they do as well. And that's why I utilize them. So I don't know. And even if somebody else came out, you do have, you have Trading View, you got a couple of these platforms. I'm trying to think what Minervini's service is.
E-Signal.
Deep View. What was the comment?
He uses E-Signal, I'm pretty sure.
Oh, yeah, E-Signal. Yeah, this isn't, that's for his data, but he uses, I forget who he uses for his charting service. Let me see here. Minervini. Charting. This, are you guys seeing my screen right now or not? Are you seeing Minervini on the screen?
Yep.
Yes.
Okay, see, I don't know what this service is. This is something that's called Mon Alert. So this is, I forget what I don't know who powers this, but
as far as tables with earnings, I have not seen anything laid out as well as market search.
Is that right, Paul?
From what I've seen, yeah.
Okay.
But there could be something, but I don't know what it is.
Yeah, me too. I'm in the same boat with you. But I've been using these guys for almost 30 years. and from the books. I used to get the books, and now, I mean, this is I find it as you're gonna have to. I think you have to spend money on your business, on your on the investment side. So I'm all for spending money for something like this. I think this is the best tool that I've seen out there. I just like the way the data is presented, and it's consistent and stable.
It's created by people who have been very successful and know what is helpful and useful.
That's a good point. Yeah, that's a good point.
Okay.
What's the story behind TEM?
Okay, so this is an interesting, AI, it's an AI play it is very interesting. So it's an AI play for biotech. And what's interesting is take a look at go to tempest.com. And it's interesting. And I love this guy. Who was he's a prior FDA chairman, Gottlieb. Used to be when the virus came out, he was on TV every day. And he's on the board. And they also have the prior Surgeon General is on the board. You got just an all-star cast that are the people that are running this company. And so they don't have any, they actually do have some revenues, don't they? So they've got some revenues, but they're using AI to develop, potentially new drugs, using AI medical research to develop new drugs. And it's right in that sweet spot. And I'm tracking it. I'm tracking it. That's the story. But it's
my daughter, bud.
What's John? Did you say something?
No, I'm sorry, Roy. Forgot I was unmuted.
Okay. Yeah. So there's the story. I mean, you can read about it, tempest.com. I'm definitely watching it, and I seriously thought about getting in it. I actually did trade it. I traded it I made 20% in our accounts right here on this in 2 days, like from the bottom here, and made it, bought it here, right there, and sold it. Here, let me change the date. I'll show you. This was June 28th. Let me change the date. And we actually made 20% in 2 days, and we sold it. June 28th / okay. So right here, so you can see where I had the alert. It was an IPO that was hot. It was a lot of fanfare, hot, but the stock dropped from 43 all the way to below the IPO price. And when you had that reversal day right there, we bought it right there. And under 26 and sold it, made 20% really in less than 2 days, and took it just for the trade. And it ended up following through, another day. But it's, and we almost bought it. Let me see on the pullback. Let me see here.
It's so volatile. I feel like we have to buy it on a moving average.
Yeah, look at that. Look how wild it got, and then it reversed back up. And I mean, it's just all over the place. But we're definitely watching it, because maybe it takes out the old high. See, I've got an alert right there. I'll be, more than likely, I will be in it going into new high territory, because these IPOs that come in, really that come in like this and come back and make new highs, like let me see, Google on 422.05. That's when I bought Google first, I think. Geo, I think let me see. And and this is going back 422.05, 0405. Nope, 2005. Yeah, yeah, actually, yeah, I mean, that's when I bought, this is the second time I traded Google right there, but this is what I was looking for. And I did trade it right here off the IPO when it came back and made a new high. So take a look at this. So this is sort of instructive, guys. So we have 11, let me look at this, 11/2/04. Let me change this date. 11/2/2004. This is one of the, and this is interesting. In 2007, I had a really good year. I think I was up 1.6 million in 2007, and 1.5 of that was Google, just in one stock. So and I traded I was very, very active, but it all came in one stock. But what I was wanting to point out is, see, when Google had this big correct, Google came out, the IPO came in, and then it came back and made a new high. See right here. And I know about Google right there. When it made a new high, it came back and took out the IPO price. And, at the bottom, and then you got this move here. You got a double out of it. Boom. In, a few months. But let's take a look at what it looked like before it proved itself and went to a new high. Let's just change the date so you can get a look at it. 92/04. 09/02 2004. See, guys, look how bad this looks. See, the IPO Google came out, ramped up higher for like 2 days, got slammed, and then it came all the way back and made a new high. And then it took off. So I'm watching, so my whole discourse revolves around this TEM. If this thing comes back, oops, they've changed the date to now. If this comes back and makes new highs right there, I'm interested. See right there. Came all the way back, got hammered, came all the way back, and yet made a new high right there. And all this, I'm just sharing with you, like, these are just anecdotal, anecdotal information. That's why I like this GEV. I mean, came back, made a new high. Now, if this thing makes a new high, it's a fresh name, big company doing $30 billion in revenues. This thing going to new highs right here is a buy right there. And, it's a buy, it's an add-on, it's a press. A few of these companies, I thought this A-Lab was going to set up, but this was a false alarm. And, great numbers. And this is one of the, I thought this was going to work because it was one of the first IPOs that came out this year, a big IPO that was heavily purchased and taunted by Wall Street. But apparently they've got some competition issues with Broadcom.
Roy, how about looking at Reddit?
Reddit?
Yeah, it's looking a little bit like Google did in the beginning, and
Yeah, yep. It's definitely, it's on my focus list. It's on my watch list. You know, not a great. I mean, you know, I think of it. I think of it not as a serious investment firm, but I think of it as as a meme firm that can get hot just because. You know, again, Reddit pioneered the move in GameStop, right? You know, all the guys that were on Reddit. But you know, the numbers are, the revenue numbers are fine. They're okay, but I am watching it, but I think it's sort of a second tier name.
they keep on showing up more and more in my search results, and I end up going there more and more.
Do you really?
Yeah. Yeah, I don't know what their
Okay.
user count is or anything, how to find that out, but I've been going to it a lot.
Well, that's interesting, especially from a guy like you. I think that's important. That's important anecdotal information. Thank you, John.
Uh-huh.
Okay, guys.
Hey, Roy,
Yeah, go
one
ahead.
last question. Sorry. What's your take on the oil stocks? I mean, oil is coming down a little bit, but some oil stocks such as Diamond Energy, oil stocks.
Yeah.
Oil stocks like
So I like this.
FANG is, for example. Yeah, you go for it. I listen. Sorry.
Yeah, I like Weatherford. You can see here, Weatherford's breaking out. So Trump is going to drill. So the numbers are fine. Numbers are fine. You know, this is a nice breakout. I'm definitely watching it, and I like TDW. And Weatherford. These are the two that I like. And the numbers here are quite robust. And so I'm interested. And I mean, these are the two that I like are Weatherford and TDW. And Tidewater's in the service area, and WF4D, in a more complex drilling company. But New High, that's what I'm. ConocoPhillips. No, you want to be
any thoughts on FANG, Diamond Energy, FANG?
Yeah, I like it. Yep, like it. Yep. So I would have that. So if I had that would be the three names: Weatherford, Fang, and they're in the Permian Basin. They bought, I think they bought Continental. They've got millions and millions of reserves. So I like it. Definitely like it. So it's definitely, there might be, this rotation that's taking place might have room. Maybe I think maybe everything works, guys. It's a matter of just kind of navigating through this, and just navigating through this, knowing that okay, we're overbought. How do we position ourselves? I think the upsides can be tremendous second half of the year, but there's going to be a stop and start. It could come. We could have a rug pull soon based on no news. We'll see, but it will be resolved. If we have a pullback, it's going to be resolved to the upside. I firmly believe that based on the stuff that we've looked at and what we look at historically from that new high list, from the AD line, things like the Watley or the breath thrust from what's his name?
Marty Zweig?
Not Zweig, but Walter Deemer. Guys, I think I'm talked out. Listen, I want to thank you for attending tonight. It's been a great productive meeting in terms of just sharing like some tactics, we went over just a broad background in terms of looking at things that you should be looking at, just to give you an idea. That's useful, just to give you context, looking at breadth, looking at the technical factors. But then when you dial down, this is where the money's made here on the things that we're talking about. There's a lot of stocks we talked about tonight. There's going to be some big winners there. You guys are on the right track because you're asking about the right stocks for sure. And it can be better than you can imagine. I mean, I've been doing this through the up cycles and the down cycles for many years, and gone through a number of bull and bear markets. I mean, I'm the ingredients for this leg of the bull market. We've got powerful influences here for for the next year. So this is the next year could set you up for the next 5 years, basically. If you take advantage of the opportunities, and you play it right. But Wes and I, we'll be here to guide you along the way. Follow us on Twitter. We hope that you're on our mailing list. And thank you for attending tonight, and we hope to see you next month.
Great meetup. Thanks a lot. Loved it.
You guys have a great night.
Thank you, Roy.
Thanks for everything.
You're welcome, guys. Go kill them, guys. Go get them.